My name's Darren Hancock, and it is Tuesday, the 28th of January, 2025. Welcome, welcome. Let's have a look at the markets here. Let's start off with a daily chart. I'll kind of blast through all these for the next half hour. So we've retraced back like 50%. Let's go with this whole range here. Just under 50% of that whole range. What's the high of this candle? 4235. 42875 is the high low. Let's check this one. 42375. So this swing here to that low, the last 3 days, we've hit the consequent encroachment or the equilibrium of the whole range. We've hit the top of the sell side imbalance, buy side inefficiency. We've wicked through into the rejection block and to the discount box, pulled back, and now we're getting on top of the discount inside this range. We've hit it this morning, or London's New York session made the low. No, that's today, so that would have to be London's low, Asia's low. So Asia made the low, and then so we continue going higher. I'm looking for a run back into this area here, premium rate. If this mean threshold continues to hold, well, no, if this holds here, then we're looking for higher prices. We'll see what the 9:30 open till 10 o'clock, see where that range is. If we get a displacement down, I'd like to see one more little push into 21,173 and see if we can start turning around and going higher there around 9:30, 10 o'clock-ish. Was that was 21,171? Yeah, 21,171. So we take out we get back to yesterday's initial presentation for fair value gap. Would bring us right back to that 21,175-ish, 171-ish inside here. So I like that. A retest of this yesterday's initial presentation. And then we'll see if we get a reaction off of that and start coming up higher. So I like to see lower and then higher. This reversal here. We have a reversal here. Body trades above it here. You trade back perfectly to it here. You could have caught along there at 6 o'clock in the morning. 9 o'clock, sorry. There's your 9:10 turn. There's your 10 turn, 10:45, 11, and then 12. 11, 12, and then your 2 or your 14. Turn back into the fair value gap, push higher, return into order block, find support, fill the fair value gap, consolidation, continuation. So I want to see this hold and then a continuation to the upside. We do have 6070 as an upside. We have to see that break for a continuation, and then you're looking for a further dig into 6081. Oh, it's only a 15-minute chart. Let's go to an hourly chart. Look for we have a reversal here. And support. You have to get through this if you want to go higher. We've got through it. We're coming back inside it now. I'd like to see that continue going higher. If we start breaking structure on the downside, look for these to provide a level of support to come back into this range inside here. Otherwise, further upside. We finally hit that gap we were looking for in Dow Jones. And we've hit the consequent encroachment of it already. We've retraced back to here. So if we do retrace one more time for a 930 low, look for 44,736, and then a continuation to the upside. It's natural gas. Its pre-market is lower. I'd like to see natural gas get back down into this level so I can get some more of that. Real estate still dropping. Natural gas is dropping. So we're getting ready to get into February now. So there's a retracement in February to be expected. I'm done on that one. I'm out of that. I don't even have to worry about that one anymore. I'd like to see that retrace right back to 5420 and then start rolling over and heading for sell side liquidity. We found support here. I want to see it's got to get back above 105.1. We've hit the upside objective we're looking for here. So I'd like to see that push through now, start running for these highs and start getting back up into this higher range for sugar. And we're looking for this level to get taken on the upside. Now I'd like to see that get taken for coffee. I have to look for what we got here. This one's kind of a... Oh yeah, that was the next objective up here. So we've hit that one. Now we're looking for this one. Cocoa has found support here. This is good. I want to see it hold price here and start to move higher. Looking for this upside objective here, that line. Corn has come back nicely and retested the fair value gap. The BISI here, I want to see that continue going higher. Little piggies finally hit that level. They came back inside that gap, right to the consequent encroachment again. And now I want to see this start reaching for these equal highs and start getting through this mean threshold. So I'm looking for that as an upside target right now. This is a nice reversal here off this low, pushing up higher, looking for a premium right now. There's a retest here. We're just getting super close to it. So as soon as we hit this Monday's initial presentation, fair value gap again, then you'll be right into the box-to-box trading. Inside oil, if you're into trading oil, make sure we are live and in person. It looks like we're live. Hadi, good morning. Craig, John, Anomalous, and yep, I'll get into Disney. We've got this high taken reversal, potential reversal set up here. We're trading below it now. So if we're coming back inside this range, look for this down here. It's the 9 o'clock turn. You got to see a body get through here. We've come back into this order block here. Now that we've run the high, you come back into that candle and continue to push higher. So we've had no body below here yet. So I like this for continuation on the upside. Gold. I gave this one to Russell last night. Told him about this level here. I hope he's stuck in that one. It retraced all the way back down. So you wanted to see if this level held. It didn't. And you've still got the main level back here on your discount array. Came all the way back to look at this. Tell me that's not precision right here. Right on the money. Reacted off of it. Got through the premium array on a close. Came back, gave it a little kiss, and then continued to go higher. Came back to the order block, tapped it, and then shot up higher. So if you saw that, Russell, great, and you're still in it, good. You're going to be able to weather all this. And stop loss has to sit down here. And that's quite a long way, especially if you enter in high on a premium here. You'd want to see this hold. If it doesn't, then you expect to see this fair value gap get retapped. There's the precise level right there. Bitcoin on the hourly, we had a reverse. We should all be back into the mean threshold of this candle. The fact that the body's traded below that level, and there was a little tiny imbalance down here, I would have said that's the line in the sand for me. But typically I would say if anytime you trade below that, you're expecting the range to extend. But when you get your order block this close, you have to take into consideration your order block and its mean threshold. If it literally overlaps that gap, which is the lowest, like if this was separated by a bunch of candles down here, then that would be the level I'd be concerned about in the discount portion. But because it's attached to this candle, you have to look at that mean threshold as well. So you've got a run down to the mean threshold, back through this level, and then traded back down into, now we haven't really got anything in here yet. So you have to wait for this level to get hit or a retap of this. You don't. Body finally breaks above it here, and now you're in the premium level. So you'd want to see that get down into a discount level for you to get a hold of running higher. Or you pay a premium to go higher, and you're already up in this retest of this or rebalance of this. So this would be a giant fair value gap above you here. So you're already in the premium portion. That could be a 70% often trade entry reversal for continuation on the downside. You've got a little change in direction here. So we wouldn't touch this right now. It's like right in the middle of that range. Wait for something cleaner, either a retest of this fair value gap down here and see if it holds. And running up higher into that range, probably consequent encroachment of this. I marked out all these last night, so it really has to be there, otherwise we're going to come lower. And February we could run all the way through all this, start breaking trend line phantoms. People are into trend lines right now. You want to break that trend line and revisit down into this 1480 area. You don't want to see it sweep this, sweep these, and start getting back into there. If we take that out, then you're looking for a big run down into here. Still not broke above either one of those yet. Here's your Disney. Pre-market's 113, so we're looking for a retest of this level if you want to see it continue going higher. If you lose this level here, Craig, and sweep this low, then look for this to provide support to come down deeper into the range and a retest of these old highs. You could get a run all the way back down into here. All the time this holds price, these two candles, this one here and that block there, you want to see it continue coming lower. This is probably just a premium array. We came back and actually opened up inside it and then continue to take out that and extend that range. We traded above it, traded above this level here for the little swing, actual change in direction. Above, came back, tapped it a couple of times, and then we want to see that continue to accelerate through here. So if you've on the, I was going to say on the daily, let's have a look at the daily. This was never tested. These are all down close candles. If this does continue pushing forward, I'm looking for 115. See what kind of reaction you get at 115 all the way up to 116, 116.75. This trend line here has been broken, so you're looking for at least a run back into 50% of that or more. You're at 50%. There's lots of imbalances and stuff up here. Inside the whole range, that's the premium array up there at 116 something. That's got to continue to hold if you want to keep going higher. Walgreens had a nice reaction off that fair value gap. I think that was a weekly one, was it not? Why do I have that one there? Monthly? Oh, it's a monthly. Let's make it a monthly color then, shall we? Not a fair value gap, it's an actual SIBI. But it's reclaimed. Now it looks like it's going to be a is it really only going to be, let's put that into, there you go. So I'd like to see this retest this area one more time, this consolidation. See what kind of reaction we get out of that. It's another dollar something, $2 drop into that level. I know Walgreens was looking to get bought out by some company. I don't know who it was, and it doesn't look like the merger is going well. So I'd like to see that come down in here. Then I'm suddenly announced, oh yeah, we've decided to make a deal, and then that stock take off in price. So I'd like to see us get back in here. Banks. Let's go, Gary. Get up here, buddy. It's closed above there. That's a really good sign. I'd like to see that get some support at here at 170 or 74.81. Start pushing higher. I don't want to see this. If that was intent to just run stops, you would have just seen that wick in there and then pull back down. So I do like the idea of this coming back and finding support at that level and continue to push higher. Fear Bank in Nova Scotia. Laurentian, I'd like to see get back into this imbalance a little deeper before deciding to change its mind. Looking for a retap of these old lows and then a continuation on the downside for this AMD. Look at that, their pre-market's already opened up 20 some odd cents up higher. ICAD. Nice. We're getting back into this consolidation now. I want to see it just run this low out, keep this sippy here, just come back and retap that and leave a small little portion open for continuation to the upside. A really nice one would be a return to the open 56,185 without touching that full closure there. That'll fill that fair value gap in completely though. I want to see just the consequent encroachment of that and then a continuation. So let's just see how that works for the next day or so. We might see the low of the week being settled in here in New Zealand dollar. British pound, we're still inside this level and this BISI. We have traded above the BISI, but we're still inside this SIBI here. So I want to see us close above 125.07 in order to reach for the highs. Otherwise, this could be another run back into the consequent encroachment of this 124.04. Euro reversed right off this level. I think we wanted Euro to go higher, didn't we? We want to reach for here. So this little pullback, this is an hourly chart versus a daily chart. Let's go with a daily chart. So you see these fair value gaps. They become important levels. And now all of a sudden you've got discount, equilibrium, premium. So you want to see this one, this equilibrium level, hold price, and start pushing higher. Look for that little tiny level that's sitting in there first, and then run for the next highest level. So you're looking for some support in here. On the daily. Next objective is 105.50. US dollar, we said we wanted to see it come down to give these other guys a chance to go higher. It's coming down, and so is, that's out of sync. Usually these are continue to rally when the American dollar drops. Oh, this is Canadian dollar. Jesus, no kidding. Canadian dollar futures. That's the US dollar here. Went higher. That explains why they're going lower. Okay. So now we hit that upside short-term objective in the yen, and we've come back in through that level with a wick. Body's just sitting on it right now. So I'd expect to see if this will create a wick in here. Now that we've hit the mean threshold of this candle, I expect to see this turn into a wick today and see if we start to look to go higher. If we just waffle around in here all day, and then tomorrow find support in here and then continue pushing higher. Yeah. This is fine for a continuation for further upside. We're still cheering on the team, looking for the premium array. That equal high is above you here. 15 bucks, 14.55. Just not reaching for it yet. All right, 3 more minutes. Keep your eye on the 171 level, 175 level we talked about. Just trying to give somebody some advice here. Sorry, I just got to, no, I'm not sorry. Somebody needs some help, so I'm watching for you, Russell. You got it, buddy. You got to believe, man. Just keep believing. What's happening now is your moral fiber, your fiber is being tested. Don't sweat it. if you're trading live money, pull out until you see something clean. Probably stick with some of the regular trading hours that provide a lot cleaner setups. After hours, you can get beat up pretty good, especially in the Asia session. It can be quite choppy. So a retest of this here. I like to see that continue coming lower now. And start looking for that 171 level. Morning, Abs. 10 for the silver bullet, yes. Morning, Russell. Stick with it, buddy. You'll get it. It'll come to you. Thanks for the Disney. You're welcome. The WBA buyout deal's gone. Morning, Derek. There's a premium array here. It's already through here. $240. $218. Good morning, Simone. Just to reiterate what I'm looking for. At 117 or 171, I should say. Is that an hourly chart? Yeah, right in here. That's 162 to 197. That's the box I'm looking for there. I'll stretch it out for you so you can see better right here. I'll move my stop loss to break even. Actually, it's in profit now, just because it's off this order blocks where I endured all this, and then as soon as we broke that low, moved to break even. Now I'm sitting up here. And that could just pop in there, so I'm gonna sit just above consequent encroachment here. If it's got some real energy, it should leave this open, or at least half of it open. On 171 is where I'm looking for. You want to see this hold price? I don't want to see this start running back through here. Let's go back to hourly on that one. I like this one because it's got a time and a bottle on it. 38. That's the crazy Ivan. See this continue coming lower now. Crazy Ivan. Uncle D. Morning, Sir Chris. Hope you're taking notes. You got your pen and paper out today. Finger off the trigger. Just looking. You want to be one of those little careful auctioneer buyer type people. So one more run down into that 171 level. And then if it continues to go through there, and I'm going to manage this from a different perspective here. I'm going to manage this from it's one of my practices I have to get into. So as soon as I reach that, I'm going to take, I got 3 lots on that. So if I take a portion of that off, or 3 micros I got on. So if I take 1 micro off at that 171 level, my stop now is moved to here. I don't want to see it retest this. So just a little lower, it's in here now. I'm looking for the reversal. So I'm going to trade this all the way down until I see a reversal. So I'll hold this. So when you start looking at this, you go, okay, if I've taken out some lows and you're on a 1 minute chart, you're looking for a discount array. Now that you've taken that out and that out, you have to extend the range. We've taken this. So all I've got left really is this guy here. And that you're just running through it right now. You got this guy here for the next little range. And then you got this level here. So all the way down to there, which is 140, 1 something. So we're just going to keep watching. That's a little early to be squawking away on the old horn out there. So you see these reversals that are starting to set up there. So for me, you can, if you see it run through it, come back to it, then you close that short. We're looking for 171. There's 171. We're close. Now I'm gonna aim myself at the bottom of that. Take a partial there. And now you're looking to see if it gets back through here. So there's the high of it. Watch the close. My stop is sitting just above here because there's the premium portion right there, that little imbalance. And if we close to above here, then I'm looking for this to go higher. So as soon as if it closes above that, then it comes back into that range, I'll close that trade off for a short. Because I had to close right on it again. So there's your debate. So now I'm going to sit right there. So now I'm saying, okay, I'm right here. If it comes back and takes me out there, I'm fine. And it's right on a 45 candle, so 48. We're literally on that. That's that debate we talked about so many times in the past. If it closes on it, do you still take it for a long or not? So I'm literally sitting right there now saying, if it pops up above that, again, I'm out. And that's how close my stop loss is. So you see how it did not break that high? There's your debate. So if you say, I was going to go higher on that, now it's running back to take your stop loss. So that's why I like bodies. Bodies give you a confirmation. For me, just that little wick is not enough. So the body literally froze on it. So that's a really good example. And now, so we've traded below this one here for range extension. If this wicks back up into here, you want to see that hold and then continue pushing through the 171 level. So now my stop's here because I wouldn't want to, if it comes back into here, we're retesting this again and we're just in a consolidation that I'm not interested in. So again, I'm just looking for any reversal. So now this one here has been retested. Now I'm going to wait until something new. So now I'm through that 171. So they're down to 163, I think it was. And I'm just going to hold the rest on here now. And I'll wait and see if, as soon as there's a reversal here, we'll take the rest of it off. So all I'm looking at now is this mean threshold of this candle. There's no reversal here yet, so this just tells me it wants to go lower unless it blasts all the way through this and uses this level and that candle for support. I want to see these ones really break market structure here to get me going back towards our first initial opening. So this is the Judas swing I would imagine I'd want to see for till 10 o'clock. 10 o'clock makes that low. Look for the silver bullet for the news event to start coming higher. There's the 163. Mean threshold, I don't want to see it close above that. But we see how we've come down. We've back into this, retested it. Now we're through the mean threshold. Just took me out there. See how that mean threshold closed above it and then quickly ran up, took me out. And that's it. So this could turn around and come back down again. I'm not interested. The 163 and the 171 were hit. Now you'll just wait for another 10 minutes or so for the news release. See what happens. If we extend this range a little deeper. See how we closed above that mean threshold, came back down to this order blocks, open, push higher, and now we're back inside that range. But nice little precise level there on the 1 hour chart that we were talking about. We wanted to see it come back into this level here. Came back nicely, revisited it, and now we're going higher. That one. See how we got above here now, but we haven't come back and retested it. There's the next cluster here. You want to see it close above that, come back and retest it, as long as that's in a discount array. Not that you would do it now because we've got news release coming, so it can get quite volatile. So just sit on your hands and wait. But just watch it now. So Chris, when you're watching this, put a little journal entry, make a journal, get yourself a little book. I've got a black book. I've got the black book. I have a bunch of them. So you write down in your journal this kind of stuff. Screen capture this and say, look at this cluster of candles here, up close candles. Look for the high to the body, and you don't want to see anything get below that, one tick below the wick. You want to see this fair value gap here stay open and continue on the upside. Screen capture that, and also screen capture those emotions of yours right now. How are you feeling about this? If you're actually entering into this trade, you can just pretend, do a little pretend click if you feel the need to press that button, and just say right there, I would go right long right there, and I would wait. And where am I aiming for? I'm aiming for my upside objective, and I put a line up in, let's say, here at 21,293 as an upside objective. Actually should be the bottom of this. We've already hit it once, so I'm looking for this to get through here now and start running it a little higher. You're into this order block, so I'm looking for this 293 level. So you're through here, you've come back into the breaker that takes out that low. You're back into that, pushing higher, looking to get through here now. Look for this candle as a propulsion candle to continue push this price higher, and now you want to see it accelerate through here, not just come back and tap the breaker. This is a breaker that runs all the way up. That'll be the parent breaker of that whole run that takes the high out there. Or you could say this one is those clusters. This guy sits in front of these, so you're right back up into their body. Come down, give this a tap. That's a 55 candle. So you want to see that 55 tap here. Now start to turn into a bullish candle. Or a 55, 58, going higher now. You're still looking for this line up here. So right now, Chris, you notice like no one's panicking to get in a trade. You're just waiting for the news to release. And yeah, we did some calls on it, but it's just practicing staying on the chart, staying on the horse right now. You just want to get that feeling like it doesn't matter. You can let these go, and you can wait for your optimum setup, wait for the news, all that volatility, get yourself out of the danger zone, and wait to see what price is going to do. And then wait for your silver bullet. Now, if it's in alignment with what we're looking for, so if that was my downside objective and the Judas swing for the morning from 9:30 into the 10 o'clock, and then the reversal, you want to see, we could see another run back down below here, and that little box we had sitting down here that I erased already. Can I go back to that? Yeah, right there. I'll put it right there. And then we're looking for this guy here. So now you're in a real premium portion. We found support off that level with that propulsion candle, which is what we asked for and got that. We want to see it eat through this breaker. It's eating through that. We want to see it accelerate through here now because this has all been worked, and accelerate through our level here. And then the next level after that will be 300, 21,300. Anybody have any questions on what I was discussing there? Why I had these specific levels? It was 71 and 163. Again, they're over on the hourly. Sorry, hourly down here. The discount array. Now, why this one and not this one? Because this one's already been attacked once. But this one, when we ran through it, we never came back down to it. We just wick, wick, wick. Now we've come back into it. I'm looking for a retracement back into this higher one here at 352 on the hourly, if that's where you're looking for a continuation to the upside. No fancy reversal. So if we do get a return here, now that you're right up into this order block here, if that does kick off and you don't get that, just wait. She's a coming. So optimum trade entry reversal, you're way into the 70-80% retracement range. I still want to see that get tapped once first though. And then look for this level. After 10, you could get another consolidation here during the news event. We could get one more run back down, take out these lows at 940 or 950, and then the continuation. So there's a 58 candle swing. Now you want to see just shy of hitting our objective right there by half a handle, one handle. Just would like you to say, would just like to say thank you. You're welcome, Hadith. Bang, hit it. And I drive through the 300 is the next level. Boom, 300 done. All right, so now we're looking for, see if it closes above here, and we're looking for a range extension now. They got these highs, and we're looking for that. I'm still looking for a run back up into here. I've hit the downside objective. Now, my problem is, do you have enough trust now? Even though I called that level, do I have enough trust to just say, okay, I unload my position, now I'm going to reload in the long position. I trust that's going to hold. I'm not there. Michael's there. I'm not there. Darren, when I'm setting up my calendar for the year, is January considered 00 or 1? Lucas, box to box. Oh, 1. It's considered 1. See how we closed above it? Lovely. Look at that range extension now. That's how you can know whether or not the range will extend. Once you get through the premium array on a close, we should see a retap and then higher. If it's got intentions to go, just like you see this, the range extends. We trade above it and then quickly run through. So we're looking for this box up here now at 342. And we're looking right there at 351. Now, Chris, are you listening to me, Chris? What are you thinking right now? Are you thinking, man, I should have taken that trade? Are you thinking, I should have bought into that at lunch, at the news release? You wait for a silver bullet setup now. And now what we're looking for is 910. See this displacement right above here? So that we wanted to see it accelerate through here. So beautiful. Right up into, I like this up here yet. I don't want to see it quite hit it. I like to see us come back a little bit first to 300. Right into this level here. And then see if that can go along. So that would be like your, here's your 1001. Silver bullet, there's your 2. You may not even get to tap it. The range, it's just about to hit it now. Yeah, there you go. Let's hit the edge of it there at 252. Done like a dinner. Now you're looking for this. So this is an immediate rebalance. Treat it like a fair value gap. And we're running right through it now. Now, if you're saying to yourself, man, I missed out on all of this. I should have, no. Journal that. Journal it, because that feeling you're having right now, it's important that you don't say, oh, I missed it. This is a 1 minute chart. You don't think that there's another setup coming your way? They're happening all the time. Some people are sweating, waiting for hourly charts to do what they have to do to get in on one trade. You got a 1 minute chart. There's always stuff here. No need to panic, my friends. No need to panic. Let's quickly have a look over here. Look at that. Same thing on the hourly chart and the ES. Look at that. Retapping of the same one on the ES for the hourly. Mind you, they didn't come back to a full fill. They just came up to the consequent encroachment of it. Hit the consequent encroachment. All these candles in the way. Consequent encroachment. Is that randomness? You might think so. If you're new to our channel, you might say, nah, that's bullshit. Too many candles in the way. Like Michael says, we cut through candles, brother. We cut through candles. Those are specific levels we're looking for. 1, 2, and 3. And there you have it right there. I know it looks like I'm form fitting it. And we're calling for this to come higher in the Dow Jones for a fill of this gap. And then once we get through that gap, look at for some support. And then we've got little imbalances all up inside here for more upside and equal highs above us. So January tends to make a high and then we retrace into February. So I want to see how that goes. Times are changing. So old high. I like a 343 natural gas. Gold we'll get to in a second. Wheat is right back up inside here. So there's the 542 we're looking for. Nice. So I want to see this turn into a wick and start to come back lower. That's hit that objective. Got to get on top of this candle now. Then we'll start marching higher. If not, we're looking for a retracement back down into 18. 1876 to 1846, something like that. Coffee still in the middle of that, still there. We got a nice support off of corn. I want to see that really start to climb through this rejection block now. Looking for that upside there. That's all looking good. We came back into this order blocks body, so I want to see this continuation on the downside. Take out these lows now. Look at that, nice retracement back into the initial presentation, fair value gap, back into the order block. The breaker right there, man, that's like textbook. 2022, trace below, return back into the breaker and go lower. Get your next price leg, folks. Get your price legs here. Get your price legs here. Yeah, that's beautiful. It's lower. Gold. Golden, golden, golden. Let's see what the gold's in. Okay. Oops, I don't want equilibrium. I want retracement. 62% retracement. So if you were pulling your fib tool on this and you got in your entry right here or anywhere inside that box and you're able to weather that and you go long, you go, as soon as my trade breaks a high or takes the 50%, whatever you want to, however way you want to trade that. If it takes the high, I move to break even, take a portion off here. Leave the rest on to see if you can get to here. Take half of your trade off at 50. Move your stop loss to that old high or just above. If you're still using the fib tool as your way to manage it, you go to break even, take half your trade off here. As soon as it hits 60%, you move your entire trade to 50%. So you've got half off, you got the other 40% sitting here, and you've taken off 10% there. So if it comes back to here, you're out, because if that reverses and comes back down, you gave yourself maximum profits here, and you've covered just underneath your 50% there. There's a small fair value gap. I would sit just here. And then I would wait. If I get to 70%, I'd take a portion off there, move to 62% and wait, because that could be optimum trade entry reversal for continuation. If it's got intentions of going up there, this is where, as it starts to get closer and closer, you notice how these get smaller and smaller. The likelihood of you getting taken out is quite easily, unless it's just books it straight through. But anyway, just something to kind of keep in mind. And that's trading on the hourly though. You have to stay committed to the, or the 15-minute. You have to stay committed to that. If you don't, then you start jumping around different time frames and letting other time frames influence a 15-minute chart you're entering in on. Then unless that's upside a higher time frame objective you're aiming for right there, stick with the chart, the setups that you've been shown here, or that specific setup if that's what you're using a fib tool. Okay, that looks like it's doing a nice little. So we're on gold, so I'll come back to gold in a sec. See this candle right here, find support at this candle. I want to see that stay open now. I don't want to see it come back into this range. Don't trade it, Chris. Just watch it. Just study your price action. We're getting into the squabblers now, right? 10, 11, 12. There's your return back into here. So look for this to push lower. And I like to see us reach back into that level here one more time. And we'll see how we act inside here. If we break through that, then I'm looking for a deeper run down into that range. Because we've got a reversal happening right here. Body's traded below it. We have not retested it. We've got an order block that we've run through the order block now. So you look for the order block to provide its support levels. And there's a little SIBI sitting right here. There's optimum trade entry reversal. There's the 10, 11, 12, 9, 10 turn, right? Well, there's the 7. This is the 9, 10 right here. 9, 10, 11. So we could get 12 up in here. Don't come too high. There's 11. 12 says, no, I want to be the high, but I don't want to fill in fair value gap. That'd be nice. There's the, maybe we retap this little fair value gap BISI here. Right there, being hit it. Now watch. See if it fills. There, fulfill it now, and it filled this. So now if you get back up on top of this, we've got another SIBI on this side. BISI on this side, SIBI on this side. So you want to see the bodies close above here to go higher. And then you start to go, ooh, this would be a delicious run if this was the next price leg higher. From here to here, extend it. So see how we're marching up into the rejection block now. The 12 candle. So you got the 9 turn, 10, 11, 12. They're following each other. So 12 obviously sets the high and says, now it's going to change direction because it finishes that run. This makes the turn. 10 starts the next run. Now this one's taking out that high. So for me, that gives me a little more hope that we're going to run up to a higher time frame candle. So here's your 1001 silver bullet retracement. Now you want to see that continuation. Gets above here. Now you want to see that continue go higher. And look for this candle here to provide support and that little imbalance right there. Body's broken above it now. Continuation. Just watch this, Chris. Study it. It's better than engaging in it. If you feel the need to, like, maybe document what you're feeling in terms of, you know, just as he was describing it, I was getting myself anxious going, I could be in this. I could be in this. Well, you could be in it because of what I'm describing, not because of any logic that you have that says, yeah, that's a logical place to find support based on an order block or whatever. And if you can explain it and it's a total setup as you would normally take it, you have a fail safe. Now, I know some people don't believe in fail safes. I do. I look at that and say, where does this fail for me? If this now becomes a fair value gap and we lose this on the downside, stop loss is here, fail safe is here. So if I close below this, then it's going to run for my stop loss. So this is just for a catastrophic sudden snap back and take you out. But my fail safe is, hey, look, we've run above this high here. If I come back inside that range, if I take out this BISI here on the downside, I'm coming deeper into the range for this discount array down here. So am I willing to give up all of this in profit? If you're saying, yeah, I don't mind leaving it here and risk losing all that profit. If my entry is here and I'm going long, I'm okay with my stop loss coming here and this get retested. I just want to see this order block get tested, and I want to see it accelerate from here. So that's what I want to see. If I don't get that and it starts to do more and working in here, I start to lose my love for this giant rocket going higher, right? So I want to see this really accelerate through here now and not just kind of waffle around in here. You just want to see it tap like, I'm trying to give you an example here. When you see it, when it comes down, comes back up inside it, you want to see it accelerate quickly away from it. You don't want to see multiple taps on your order block. You don't want to see multiple taps on that. You want to see one wick just come into it and then quickly turn into your bullish candle. All right, so you've seen this, it comes back into here. Now you want to see this one start really accelerating and going higher now. Now, if you can't describe your candles and what you want each candle to do and what levels you're specifically looking for, and when it starts to lose its love for you, Chris, you got to sit on the sidelines and wait, man. You got to really wait until you see something that you think, yes, now that's acting the way I want it to act. If it's not acting the way you want it to act, get the hell out. And it's okay. You don't have to marry anything. You don't have to have a marry. You don't have to marry any idea. If you see the chart's not acting the way you want it to act, move to the sidelines and say, well, you know, what time frame am I in? Have I missed that 9-10 turn window? If I have, and it accelerates away from me, then I'm okay with that. I'll wait for this afternoon's setup. And if I can't get an afternoon setup, I'll wait for tomorrow. And I'm okay with that. Just because I didn't make some money and I got all these bills and all that, do not, my advice is, don't have your whole life resting on whether or not you make a trade today, because that will force you to overcommit too soon, because you'll be like, I haven't made a trade all day today. I need to, and I've been watching these setups all day. They've been great. Why haven't I got into it? I should have got into it. Shoulda, coulda, woulda, man. All that's doing is just building anxiety in your body. It's building anxiety in your mind that you've got to react when you first see something, and you're going to count on your gut. Not the place to be, man. Anyway. Russell, yeah, I got a bit of the FOMO, yeah, right now. That's okay, Russell. Just, that's a really good acknowledgement you have there of this fear of missing out. If you go into the psychology section of our chart there, I kind of gave you some little bits of psychology to help out for that fear of missing out. And I kind of catered it to someone like Chris, because I know Chris is like, I got to hit that button. We've got to kind of break that whole idea and get into a Zen place. Get into a Zen place, because you do not want to start risking live money if you cannot get this under control. So good for you, Russell. Would SB still be a long at this point, or short? SB? SB. What's SB? Sorry, Russell, I missed your question there. Yeah, too many people worry about the last one and then miss the next one and start to cycle over defensive boxing today. That's good. That's a very good point, Lucas. Thank you. Look at 649 candle, 1 minute chart. 649 candle, 1 minute chart. 649 candle, 649 candle right here, 1 minute chart. That's the high. So look for these two candles to provide support. Yeah, I'm looking over here. Yeah, that's a good one too. I like it. Look for this right here, 649. There's a small imbalance right there. I like that. Look for acceleration through here. I want to see this really start to pick up some speed through here now. This has been worked really hard. So the next upside objective I have would be like 407, then 414. Now, if we could get through this level here, remember we want to see this really accelerate now, right? We want to get through that 393 level. It's got to really burn through here now. Now my stop loss is right up against that. I'm right up in here now. We've tapped this. I don't want to see this. Sorry, we've retapped this order block here, this one here. I do not want to see it get back below here now. So I'm sitting in here because there's no reversal here yet. So I want to see the reversal would actually be below this level. coming back into here, and I'm not willing for this to come back down there now. So I'm uptight against this. Now this is the acceleration we're looking for. Make notes on your psychology of your trade, Chris. I'm moving to break even now. That trade there, I took a trade off of here, so now I'm stuck just above. I paid for the trade. I'll let it run now. So stress-free. So there's no reason to get all worked up now. You're stress-free. You're sitting in a positive trade. Your trade's paid for. If it comes back against you, don't look at these little numbers that are ripping up the side over here. If you look at the numbers and go, oh, money, 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 money. If you're focusing on the wrong damn thing, focus over here. Focus on your charts. Look at these equal highs that are above you here. That's where the next objective is. Now that we're busting through this, I like that. And then I like that. And then we're like this. And then I like that. So as long as it keeps acting, this is the acceleration we wanted to see. Why is it in acceleration? Because it's through all this. This has been worked like crazy. There's no reason now. You want to see it pumped right through that. We looked at 414, I said. There's 414 right now. Now my stop loss is into profit some more. I'm up in here. Now you want to see it climb above. Oh, acceleration. Did that give us an acceleration? So, Chris, screen capture that and say, why was he calling for an acceleration here? Why this? Look at this over here. You see that cluster? Look inside there for your reversals. And if it blasts right through it, you see this has been worked so much in here. I want to see it accelerate through there and start getting some support above these things. And look, it reached right for that objective. So I am literally up against here now. I do not want to see it come all the way back down through all this mess again. So it's hit that objective. I've only got one micro on here. I thought I had three, but I've only got one on there. I tend to just trade with three and take one off and let two ride. So that's right back into the midnight open range. Price is taken box to box. Silver bullet fires early. Yeah, the silver bullet off the 10, but don't forget, that's the 1001. And what did we get it in on? 1010. Remember the wick of the hour? There's the 1010. That's the wick that I tried to tell you guys about in the first 15 minutes of a candle. Look for that 1010, 910 to 18 reverse. So there's your 10 perfect reverse there. We don't get an opportunity here, so you wait for this to get cleared out, come back in, find support there, look to go higher. So again, now I'm looking for just a simple reversal pattern to take my trade out. Or you can do the higher time frame premise. So if you're now in on a long, like if you kept that one there and you're going long, pull your fib tool. As soon as you get to 60, there's 50%. So you should be at break even, take a portion off there. So as soon as it hits 62, which is 570, if you hit 570, then take another portion off there, move your stop loss to 50%. And wait. And because I entered in on a 1 minute chart, I'm just simply looking for the next reversal. So I'm looking for this opportunity where you see this, trade through it, come back into it, and I go, that long, whatever long I've got there, is out there for a short. So it's just another way of managing that trade. That was a really beautiful 163 reverse today. I'm not bold enough to take those right at the level I'm calling either. So anyway, whatever. Let's catch this baby on a nice little run. So now you should be stress free. And if you're getting anxiety about your trade now, and you're not sitting in a place of just let it run, let it do its thing, and just wait. Don't worry about the numbers that are ticking over here, because they can get very enticing and you start to look at those numbers, and there's so much that you start to look at that and say, that number right there is, what does that mean? It's a day's wages, it's groceries, you start putting all these ideas about what you see that number is. Oh man, that's a lot of money I made there. Oh man, that's like half a car payment, or that's a part of a mortgage payment. Or instead of focusing on the chart, don't worry about this. Focus on precision. Focus on your entries and your exits and wait for reversals and all that kind of stuff. And then this will take care of itself. Don't worry about that thing right there right now. I know it's hard to say, but you need to journal that. If you're, see now this order block here, that's where my stop loss is sitting, because I don't want to see this get taken on the downside and that order block get used as support. So I'm watching that we're into the consequent encroachment of the midnight open range. So I want to see it push through here, and then it really gets exciting if we can get on top of this, because then you're looking for that looking for one at 53. And strangely enough, what does one put us at? Look at that level, and where does one put us? Look over here, 62% retracement. So one level standard deviation above that gives us 62% on a retrace through the larger range hourly. So that would be I like to see this come back, find a little support in here. And again, we're looking for a simple reversal that says time to close the trade. And if I get that reversal, I'm out. I'm done for the day. Move to the sidelines and wait. Box to box of, or guess we missed the SB. I don't know what SB is. What's SB? Sorry, my brain's going dead on me here. What is SB, Russell? Question, Darren. Every time we sweep a major low and I get it, it doubles and triple bottoms. When I don't get it in and wait for a double bottom, it takes off like a rocket like this. So what you're looking for, Chief, when you're looking for double bottoms to get taken out, what time frame? Tell me what time frame you're looking at. Because if you're comparing your time frame with the time frame I'm on, you're going to get frustrated. So I want to dial you in on what time frame are you looking at here. So give me your where did he go? Did I miss it? Thanks for your advice. You're a great mentor, Chief. Sorry, I'm way behind on my things here. Determine. How do you determine if it's safe to get in? I wait for the reversal to happen. So this is something I teach every day, Chris or Chief, is I'm looking for this reversal. Sorry, I'm going to catch up to your questions here. See, I got this right here. It's taken, so I don't want to see that get taken on the downside. If it does, I'm out. I'm okay with that. Now, some people might say, I would wait for 50% or more of that range. Well, I'm not willing to give up that much profit. So that order block just becomes an important level for me. So it's open. I'll allow it to come back to it's open there. That's fine. But I don't want, ideally, you want to see this piece stay open. and that just accelerate through it. So Chief, you're looking for any opportunity. When you come down to an old double low, you just sit there and wait with your crosshairs like this, these little crosshairs you see on my chart. You put the crosshairs there and you say, as soon as I see a reversal pattern happening, like right here, remember we looked at that and said, there's a potential for it to go long on that, and it didn't. You see, it came back, hit it, and then dropped lower. Then all of a sudden it ran back up. Now it ran through it on the upside. Then you look for the breaker that takes out the low. If this stops flat on that double low and then takes off on the upside, that's how I know that we're back inside the range again. Now you have to see this. You have to come by here and see us doing this regularly. And then you look for box to box trading, and that box to box. And as soon as that box gets extended and taken to the upside, I know that range is going to extend. So I know these equal highs are going to get taken when that premium box gets taken to the upside right there. I know I'm reaching for that, or there's a high likelihood, greater than 70%, that you're going to take these old highs. And it changes for me all the time now. Once we traded through it, it becomes an important support level. If we trade back through it, I go, maybe we're just going to come back in for a 50% retracement inside here before finally taking that up. But if there's a pop above it on a close, then I know the range is going to extend, even if it comes back to 50% of this little range and starts pushing higher. So there's some there's some advanced thinking in here in terms of which of these levels were hit first. And if they weren't hit first, then they may come back, revisit them first before going higher, depending on where they are inside the range. I know that's all kind of complicated. I didn't really answer your question, but I'm looking for this. That's simply what I'm looking for. Is anytime a low is taken, I look for this setup. And as soon as that setup occurs, then I'm looking for it. Unless it's on a higher time frame, and this has already occurred on a higher time frame reversal, then you can get a turtle soup. There, I'm out now. See how that's reversing? We've traded below this level right here, came all the way back up inside this rebalance. So there's your first indication, second indication. So Chris, this is, or Chief, that's the question you want to ask yourself right now, right here. See how that is my fail safe? If I lose that on the downside and takes me out, I'm out of the trade. And that literally closed below that level, came back, just tapped it perfectly, and now we're still going lower. That's it. That's as simple as I can make it, man. Took buy side liquidity, 15-second cups in hands. I say that all the time, full of anxiety here. If your anxiety, Chris, get her under control, buddy. Get her under control. So now I'm looking for this to get retapped and for this to come down lower. Morning all, London. Thanks, Steve, for your great advice. You're a great mentor, helping me out big time. Okay. Thanks, Abs. I hope I can help out any one of you guys out there. Abs is already an awesome trader, so we can tweak anything for you, man. I'm impressed. So thanks. I got a lot of love for you, brother. A lot of love for you. There you go. There's some love for everyone. Chris, I don't understand why we need to write it, since you will never look back at it on the paper. What? What did you just say, Chris? Why do I write it? Because I'll never go back to it? Wow. Interesting. That's a very interesting statement you just made there. Why would I journal something that I would never go back to? Why indeed? I want you to think about that one. So see how we got this little change in direction here? Watch it, and we're coming back into that order block we talked about, and a retap of the fair value gap. I'm all right with that. Continue coming lower. Think about that, Chris. You should go back to it, because if you make that same mistake, I'm okay with it. The moment you take it out of your mind and you put it on paper, it becomes a physical world. It becomes something tangible you can get a hold of, and you can go back and say, I'm still feeling this. What did I write that day about how I felt about the same damn thing I keep doing over and over and over again? Go back into your journal and say, it says right here. You know what I used to write to myself and say, You are in this stage of your life. When you're reading this again, in the future Darren, and I'd write to future Darren and I'd say, for example, it was about a relationship I was in. If you're still in this relationship, when you read this diary again, a year or 2 years from now, shame on you. Shame on you. You know this is not working out. You know you're just worried about her feelings. You're worried about this, blah, 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 blah. You've got to make the decision and get out. For your own happiness, get out. Right? If you're reading this again, what is possessing you to hold this? You know that you've made this decision years. And I've read my diaries and went, oh my, I read it to myself and go, yeah, why am I not learning it? So you write in there again and say, now, why did you reread what you talked about months ago? Did the same thing again? What are you thinking about? I'm thinking I've got it dialed now. I understand it. I don't need it anymore. And yet I still did the same mistake. Write it down again. Go back and review it. Say, look, this is the second time you've come back to this problem. Are you going to come back to it again? Are you going to reread this? And I want you to document again in the future. This is the fourth time you come back to the same stupid problem. Is it the problem or is it the approach? You got to fix your approach, man. You got to fix your approach. So yes, you read them again. Yes, you go over your diary again. Yes, you reevaluate your rules, your emotions. You keep yourself in check. This is the problem with people nowadays is they look at responsibility as somebody else's issue. It's got to be your thing, man. If you want change, it is not up to somebody else, not up to the government. It's not up to somebody else to do it for you. You need to get your emotions in check. You need to get your behaviors in check. If you don't, and journaling is not for you, you'll realize that you're just out there kind of going, yeah, okay. It's that disposable thought society. You get this thought, you go, yeah, okay, that's the correct thing. And you dispose of it. You don't hold on to it and say, that's a valuable piece of information I just got there. I'm going to write that down. Because you know you're not going to remember it. You're going to go, oh, yeah, I remember saying something like that. And you dispose of it. You constantly dispose of it and say, that's a nugget of information. I've just discovered something about myself that I need to fix. Write that down. And when I get that feeling again, say, no, I still have that feeling. What is causing me to feel that way? I'm still influenced by the charts. Like, it's now gone over that order block. Is he wrong now? Is it going long? Well, I'm between here and here right now. There's a little tiny fair value gap above me. I've done is retrace back into this small 50% of this range. This rolls over and comes back down. You go, oh, he was right. I thought he was going to be total full of shit. And he said he wanted to see that get broken. Well, we've got this change direction. We're back into this level. We've got time in a bottle that's a 40. So I'm looking for this level now to get broken on the downside to continue, or I'm looking for this side to get broken on the upside for a continuation. And we're still looking for 576. So if you want to get back in sync with the market, you wait for it to break above here, and then you get back in sync for a continuation. You got to write that stuff down, Chris, and you got to re-acknowledge it and test it and test yourself. You're the only one that's going to make the change. No one else will do it for you. And disposing of your thoughts like that, disposing of wisdom that you accomplish in life, it's sinful. And you'll see that you'll go back on it and you'll say, man, I wish I would have, I've known this for years and I just keep making the same mistake twice, 3 times, 4 times, 5 times, because you dispose of that genius piece of information that you discovered in a moment where you were stressed and you're emotional and you kind of done some self-reflection and you go, write it down. That's my truth, man. I believe this. I'll tell you this. I'm going to stop lecturing. I believe this. I am absolutely going to believe what I believe today, but I reserve the right to change my mind if I learn something new tomorrow. I am never going to be so rigid in my thoughts and my beliefs that that's a hill I'm going to die on. If I learn something new that helps me improve or help somebody else out better in life, I'm going to change my mind. And I reserve the right to do that because I'm a learning person. I'm an evolving human. I'm not perfect. I make mistakes. I'm going to acknowledge my mistakes and move on and I reserve the right to be wrong. And oh man, that's just, for me, it's feedback. It's just, it isn't failure. It's just feedback. And the moment you recognize it as feedback and you write it down as feedback and you imbue it with some positive energy, it becomes a life lesson that you learn from, not repeat. Because fate has a way of, it can be as simple as, I heard somebody describe it as simple as a snowflake landing on your nose to give you a bit of information. Then it becomes a snowball. Then it becomes a blizzard. And then it becomes a train that comes through the blizzard. But you'll get the lesson. One way or another, you'll get the lesson. So Chris, you'll either get it through blowing all your money away and feeling completely run down and depressed on yourself, or you write it down, learn your lesson, get excited about learning your lesson, because you're your best teacher. You're the best person you can invest in. Believe me. Sorry, that's my lecturing for the day. When you write it down, look at solidify your thoughts. You don't have to read it back. You just scratch your experience into the material from pure thinking. I like that. See, nice one, quick solutions. You just reiterate exactly what I'm saying. This way you become more aware of it each time, not just thoughts, it's material things on paper. Yes, yes, yes. You can overcome those habits quicker. Good. I like it. I like it. Quick thinking or quick solutions. I like it. I'm going to try and catch up to you here. Reacting to buy side liquidities above. Would you, 2, 3, would you, looks like delayed reversal. It was delayed approaching. What do you feel about before you take a trade? Do you see your setup? How do you take it? Feelings you go through during the trade. Are you moving your stops? How did it end the trade? How did it feel? Is that what you're writing down? Quick solutions. That's what you're telling them to write down. Those are real good little questions to ask yourself. I like those. Good fun, unless you're asking me what I think. Hello, Paulette. Paulette, good morning, good morning. Thank you for sharing your wisdom, my friend. You're welcome, Chief. Anytime, friend. Anytime, my friend. Always read journal once a week. Yeah, you know, when we used to learn about accelerated learning principles, and you break it up into 20-minute sections. A lot of people, when we used to study in school, used to study for hours and hours and hours, and you didn't give yourself a break. You need to give yourself 20-minute breaks, and then you go back and do a quick 1 to 2 minute review of what you just learned in 20 minutes, and then you start going forward. You go to the questions at the end of a book first, like in a chapter. We used to go to the quiz at the end, and you do the quiz so you know what you know in the quiz. And if you don't know anything, you already preset inside your unconscious mind what it is you should be looking for in the text to answer the questions at the end. People seem to think that the test at the end of the chapter was meant to test you when it's not. Use the chapter, the end of the chapter, and go, is that something that I'm going to preload into my brain so that when I'm reading the text, my brain is already searching for those questions unconsciously or whatever, looking for those questions. So you see how we've got this reversal has happened here now? How many of you were doubting yourself here inside that? Look at that. You can't ask for a better entry right there, right off that candle. Traded below it, comes back up inside it. Pull your fib tool on this. You'll find it's 50% of that range as well, or higher from there to there. There's 50, 62% will probably put you somewhere in here. Let me just put my little fibby tool right there. 62%, bingo bango, done, moving down. That's how you stay on the horse, my friends. That's how you stay on the horse. Trade views, screenshots. Oh man, I have to show you my binders. I got a binders where I'd screen capture something, and if Michael was talking, I would screen capture it and I would go back over and I'd write in word for word what he's saying off of that specific point, word for word, and I put it in color and I'd print it in black and white because I only have a black and white printer. But you get a color, get yourself a nice color thing. Now I've got it all on a file. So you go back through the files, and when I get on an airplane, if I go somewhere, I take a binder with me and I review it. And on that thing is notes. Psychology is on there. Your notes and your psychology is on there as well as all the information's gotten. You're just kind of reading a book. When you go on a vacation, you want to read a book, you read your whole binder of notes that you've made. Help yourself and say, yeah, now I'm relaxing out here in the sun. I want to get in that Zen state with this new information I've learned about how I was. And then you start getting excited about getting back into the charts again. Because you use the principles of environment, thinking, attitude, belief, and you reinforce that every time, any opportunity you get. We used to call it, or no, we used to, it's called anchoring. When somebody, for example, if somebody gives you, I'm sorry, I'm missing a lot of the conversation on the side here. I'm going into lecture mode here. In anchoring, when you, if I go to this, if I say to you, da 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 da, you guys know exactly what I'm talking about. You guys know exactly what that little thing is because it's anchored to you. So whenever you hear da 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 da, or you see this little swish pattern, you go, I know what that is. McDonald's, I don't know what it's Nike. I know it. Because they have literally anchored their product to you. So whenever you watch sports, you see, all of a sudden the goal is scored and the guy's like, yes, and on his chest, he is doing the physical movement of yes, power. You're like, yes, you mirror him or her, and you get excited about that. You anchor, mirror, you anchor their behavior. And what are you seeing? You're seeing this big swish pattern. Unconsciously, that swish pattern is being linked to your physical and emotional state. And it's managing your state. And if you manage your state with panic and fear of missing out, that's exactly what you're going to reinforce. Exactly what you're going to reinforce. So whenever you want to go buy a shirt now and you see that swish pattern, what do you think your unconscious, your neurology accesses when you see that shirt? You go, I want that shirt. Oh, I totally love that shirt. I love the color. I don't know, there's something about the color, something about the way it's cut, and it literally is linked. And that's the power of advertising. So the same thing happens when you guys want to link positive behavior and a mindset of trading to how you act with these candles. And if you act the way the whole market is designed, it is designed, as I've put in one of my quotes there from Warren Buffett, the market is designed to take money from the impatient people and give it to the patient people. And you don't develop patience with just, I'm just going to write it in my journal once and forget it. I'm going to acknowledge it. I'm going to find ways to reinforce positive behavior. I'm going to reinforce ways to link and lodge into my whole neurology. Calm. You got to be relaxed. You got to be focused. Wait for your setup. And if you feel that anxiety, that little cat at the windowsill looking at the birds, can't wait to pounce. You hear the cat making all those little noises and the tail's just doing this constantly, ready to pounce. And you are in the wrong career, because this thing will just give you all the birds you want. It'll just fire birds at you and you'll jump at every single one of them. You got to be sitting there like this with your claws out, waiting for the bird to fly by. And kind of a morbid way of looking at it, but you get my point. Sorry, Chris, you got me on a whole tirade there just from that one comment. Wonder if D talks to his wife like this. No, she talks to me like this. She's like amazing. She's like the most positive person you could imagine. Anytime there's something bad happens, she instantly goes to look for the good in it. It's just her mindset. She's absolutely a beautiful, beautiful person that way. And it's stunning to meet people who are so focused on trying to find solutions and trying to find good, and the good in people, and trying to find the good in a situation, or trying to find a way to make something better for somebody. And to live that way and consistently every day it really is a blessing to be around a person like that. And for somebody like me who's like an adrenaline junkie, like a paramedic, I'm hooked on let's just go. Hence the reason I'm in a 1 minute chart or a 15-second chart. It works for me. It stimulates that whole career for me, right? So it's amazing to be around a person like that. So yeah, she's the one that talks to me that way. It's just all my NLP training and all that stuff is it's nice to recognize it in somebody who actually applies it to her everyday life. While I didn't take this nice short, Hadi did. I still took a screenshot and marked the entry of the target. Later, swear in my mind to set up. I need Hadi's rules in writing. Wait now, I'm confused. Birds, cats? I went off on a tangent with birds and cats. I don't even like cats. If price goes above 5-minute candle 1 hour, okay, I truly have to say that when today I balanced all of my thoughts were correct, so I took the trades on practice account and all positive. Good for you. Good. Again, you shouldn't be taking the trades though. You shouldn't be taking the trades, because what is the taking the trade doing to you right now, Chris? Because it worked, the trade is just going to reinforce, or you're using the trade to reinforce a belief you have, instead of just going, you got to take the next step now and say, disconnect the trade, and taking the trade and validating a need to take the trade with evidence that you got. Just let it go. Do a whole day of trading like this. Now I'm not taking that trade. I did not take the trade on the way down. I caught the one down this morning, and I caught one up to here. So I caught this one down, and I caught this one to there, and I'm done. So, and I've got to learn to stay out of the trade until, because as soon as we get around 11 o'clock, 12 o'clock, I start jumping on every little thing I see, and I tend to give my money back. So what you're doing is you're trying to link now a positive feeling to a bad habit of having to feel the need to get into the market. You know what I'm saying? So get that feeling of a reward for a job well done, not the job well done as proof, having money or a number or just seeing something grow. That's the reward. You're still being pulled towards the reward instead of going, forget that. Don't hit the button. Just celebrate. Go, yeah. Okay, I got that. Perfect. Screen capture that. What did I feel when I got that stuff? Because when I add money to it, it's going to change the whole dynamic. But if you try to fix the behavior by still engaging in the bad behavior, which is hitting the button, because you still feel the need to hit the button. It's no different than the experiments they used to do on monkeys way back, where they used to, a monkey would tap a certain thing, get a reward. Now they get a shock, get a reward, get a shock. So they do more. They try to go for pleasure. So the tap, 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 tap. And then you take away these stimuluses, and the monkey just sits there and does this, because you've ingrained into its neurology. It just walks around like this, because you've ingrained into its nervous system that urge to touch, to tap something. It's terrible psychology, but it reinforces the power of anchoring. And what you're doing now is you're anchoring that feeling to hitting the button. Don't hit the button. Don't make the trade. Focus on the setup, the reward, screen capture it, write it down, anchor it. Feel how good that felt to see that. I see it. Review it inside your mind. Yes, I remember when it did that. It broke through that one specific spot I was looking for it. If it retraces back into it, that's my level. I want to see it. I don't want to see it get any higher than that. Good, it retraced back. I wanted to see it break through here. It did. Oh, good. If it comes back and retraces into that, I want to see it hold that and continue coming lower.
These are the key levels that I'm going to keep looking for. That's my level. I want to see it hold, and then push, push, push. I want to see it start to dig down deeper and faster now. The mean threshold, write them out, put them on the screen and say, I saw every one of those things. That's excellent. See that 1,000 times, 100 times. And then start thinking about adding paper to it, hitting the button, hitting the because when you click that little button, you should feel nothing except, no, that's exactly where I like to see it go. Now, if it breaks below that, I'm out. I'm just going to pay for some new information. You start developing a psychology around hitting that button. You're nowhere near that yet, Chris. Don't even think about that. Don't hit this. You're reinforcing the wrong behavior. Even though it's great, you have a great feeling, you're still doing it by hitting the button. Don't hit the button. Just focus on the trade. Focus on the setup. The reward, you think the reward is hitting the button and seeing the number to reinforce supposed a well thought out strategy. You're not ready for the button yet. Focus on the strategy. That's what your uncle's telling you to do. Listen to your uncle. Lucas, done for the day. Good for you, man. When do I know when I'm ready to trade then? Good question. When do you know you're ready to trade? When did you guys know you were ready to trade? Help them out there. When did you know you're ready to trade? That's a personal thing. That is a person who is very self-aware. You must document. For me, personally, I have to know my behavior, my feelings for the day. When I start to, the moment I start to act in a way that is not going to help me win a trade, and then how disciplined am I to get on top of that? And how do I get past the ego of saying, I'm going to go back in, I'm going to go in, revenge trading and all that stuff. I still struggle with that. Is it $500 for the limit? Is it $1,000 for the day that I'm willing to lose? And if I lose $1,000 for the day, go back and screen capture. What was I feeling? Why did I overextend? Why did I lose that $1,000? When I can see this kind of precision, why didn't I get out there? Why did I change my rules? Why did I become flexible in my rules? And that's the classic thing Russell talks about. When Russell gave us that statement about, see how we're breaking through this level now? You've traded back. There's a reversal. You've taken out this low. There's the reversal. And we've traded back below it. So you think, okay, good. Extend the range. So watch right here. It's important that you see this because this is where you get to change up your mind. Why you see consolidations can bash you around. When you get this right here, see that right there? That's the reversal. So you see it when it trades above it, you go, great. Now I want to see this range extend. So it traded above it, you trade back, you're going long right there. And then all of a sudden it goes, burk, it comes back again. You go, well, that's not good. It's just done a big probe through that. I don't like to see that. I don't want to see it come back. Once it's tapped this, it's already worked it once at the bottom, and then it's worked the consequent encroachment. I want to see it tap there, and then I want to see it leave. The fact that it comes back here makes me nervous, but that's out of just experience. If you see that wick through there, you go, no, I don't like that. And then it starts to come through again, get out of your trade. But let's just stick with the old rules. Reversal. It closes below it. You go, oh, I'm on the wrong side of this. Get out. Move to the other side and wait. It comes back and then extends all the way down. Doesn't take out your stop loss, but it does take out your fail safe at a small loss. Small loss. Then all of a sudden you see it trades back through it again. You go, good. Now you can either get back on top of it the moment it comes back and taps it again to go higher, or you wait for the high to get taken and then trade back into the high to go long. So there's your return back into it. Now you expect to see that go higher. See how you've got a reversal here? So now you got to say, weigh your reversal for a short against the reversal to go long. So that's the tap. You want to see that start accelerating through it, not keep coming all the way down here. You've already tapped this once. That order block there, you've already gone through the mean threshold of it now. I don't even like that. See? And now you're back through this one again. Don't even like that. That mean threshold, line in the sand. Now if that turns into a giant wick again, I wait for it to get above here. I wouldn't even mess with this because you're in a consolidation now and you can get beat up, and it's 11 o'clock. 11:01. Look for a silver bullet set up on a 11 o'clock hour. So for me, you'd have to get above here, come back, find support at this, and go higher. Too much consolidation here. So Lucas is good getting out of that. But every time it trades below it, you're out. Every time it trades above it, you could either get back in, or you wait for the highs to get taken, or you wait for this high to get taken to get outside of the consolidation and then go higher. Now you might look at that and go, ask yourself, once it breaks above this high, or that high, depends on the one you're picking for. You say if it breaks above there and you see the big bull candle, you go, oh, I could have got in right there on that one. If you're saying that shit to yourself, then you're wrong mindset. You're attacking yourself for decisions that you made here when you didn't have that information, that's insanity. Judging yourself in the future by what you made in the past based on information you didn't have in the past that you now have in the present. It's ridiculous. Absolutely. I mean, I see it all the time. I see it in relationships. I see it in life. People do that way too many times. Oh, I should have. No, you shouldn't. You didn't know that was going to happen. You deal with whatever you can with what you've got at the time. Make the best decision and don't beat yourself up. If the situation is fluid and it changes, be able to recognize that fluid change and move to the sidelines. D's wearing me out. Sorry. I'll shut up now. I get in a lecture mode. I'll be quiet. Sorry, Craig. All right, so yes. You're not going to know what to do now because I'm going to be quiet. Look for this level here. Right now, you haven't closed above it just yet. So look for a retracement back into here and here. I guess you could hit this one right here. I'd like to see this hold price and that order block high to the open, or the close, to go higher. We finally hit the upside objective we're looking for in Dow Jones. That's beautiful. Nice hit. So the next objective is right here at 45,334. I'm out of this one now. This will probably go to, I've been waiting all these years for this thing to get back up into here. Took the profit in here and got to move to the sidelines because I'm sick of waiting and holding on to that thing for all these years. And now you watch, it'll just go kaboom. I remember getting in a stock. It was a penny stock. I bought it at 27 cents or something like that, and then sold it at $1 something. And then it went up to $1.50, I think it was. And then it went all the way down. So I bought a whole ton of it at $1.50, thinking it was going to go higher, and then held on to it for like almost 2 years. And it kept coming down and down and down. And literally 3 days before I sold it out, when it finally came back to a level of like, finally I can break even, I'm out. I broke out and it went to $9. 3 days later, it went to $9. I would have been a millionaire. I had that much of it. I would have been a millionaire. But hey, it happens. You talk about kick yourself there. So if this does this now and takes off, I'll chuckle to myself and say, okay, I still made a bit of profit, but it took me years. I could have got a paper route, paid for my own paper route business or something like that. Would have made more money off of that. Anyway, wheat. We're still inside this range here. Where are we at now? Candles. This last down close candle, it's open. And this imbalance, busy here. Coffee, just shy of our objective right now. Almost hit our objective. Looking for this upside objective in live cattle still. Still looking for this objective. So far we're moving in the directions we're looking for. That's good. And we're looking for this to go lower. And so far it is. There was a nice retracement back into order block or the breaker and first presentation. Reverse. Right here. Tap into it. Run back into 50% of the range. Is that 50% right there? 50%. Comes back against you. Load the trade on again. Do the same thing again. Get to 50. Take off half. Move the stop loss to break even. Hit 62. Pay yourself a portion here. Move the stop loss to break even. Comes back, takes you out. Wait for this reversal to happen. It trades through it here. You come back all the way back up inside it right here for continuation for box to box trading. You got the box down to box. It extends the range. We want to see this range extend if we get through this level. It trades back up into it, trades below it initially, then trades back into it, and then extends the range. You got a reverse. You trade it back into it. Now I'd like to see that extend higher. We've already ran into the premium portion of that range, back into this order block. We've hit it, come back down. So now I want to see if this holds. We want to see this, not all this waffling stuff. You want to see it, hit it, and start reacting off of it. It's like this. Hit it, react off of it quickly. So your line in the sand, if you want to go long, is right there at 73.15. Trades below it, it's running for the lows, extend the range. The fact that we've hit this multiple times, I don't even like that. I would wait. I'd wait for something structure break here. Get below here, use this whole area for support to go lower, or look for this to break out higher and come back into the premium range. We've already hit back to this order blocks open, extend the range. I want to see this get below here now. We literally closed inside here. You got to get below it and use this mean threshold. This candle is going to become important the moment we get below it. Find support and push lower. If this holds, look for a run back up into this level here. Gold. Gold is golden. You're up into this premium level here now. And there's nothing else above you. Maybe 2770. There is one there at 2772.
Okay, so you've got a continuation now. I'm not going to do any more trade. I have to tell myself not to do more. Bitcoin. Order block. You trade through it, come back one more time. Run back higher into the range. Back inside that level we talked about here. See that? You're right up inside that now. Into the consequent encroachment. If I pull the consequent encroachment of this from here to here, right there, oh, just shy of the consequent encroachment. You go from here to here. Inside that immediate rebalance, that becomes a fair value gap. So we're just shy of that right now, of that 50% off that. Disney. See, reverse. We got below this level now. So if you're going along on Disney, this now becomes a level of importance for me. So Craig, when you're looking at Disney, I kind of look right here right now on the 1 hour chart. If it comes back and just taps this and you see it rolling over again and take out that low, you're coming down deeper into this range. So now that you've already got the reversal that's already showed you that it's tipping its hat for a run lower, if you want it to go higher, it's got to get above this level right here. It's got to get above 113.46. So if you've just taken that on a long, if it just taps this order block, rolls over and comes back down, that's stronger short. If it runs back up, taps this, that's the next weakest, and it just loses its strength as it starts to climb up through here. The ultimate level is right there for a short, where you just tap that, the top of this SIBI, this order block, and then rolls over and comes back down. So that's what I'd be looking at there, Chris, or Greg. Not a signal service, LOL. Using calls after 5 p.m. Back in the seat. Okay. So that's what I'm looking at there for your Disney. I think this one's done. I think it's coming lower. I'm looking for it to get back into here and see how we act inside here. If we take out these lows, I'm looking for any reversal here in Walgreens. If I see a reversal down here, I'll get in Walgreens, even if it's like at $9, just to run back up into this range for a 10-20% return on your money, move to the sidelines. Walgreens pays like 8% or something like that. Dividends. It pays really well. Get up there. iCAD. My buddy was telling me about this iCAD. He goes, check out iCAD, man. I looked at it, I was like, ooh, that's really taken off. It's a little retracement back into 50% of the range or more. From here to here, 50%, just into the discount zone, and then left dodge. And my buddy Derek would look at something like this and would say, this would be a really kind of an interesting swing pattern from this high to this low before it takes out that high. There's 2.5 right there. 3 and 4 is probably right up in here anyway. We hit our objective in euro now. I'd like to see that snap out of here. Now that you've hit this level, I want to see that snap out of here and start going higher. Tomorrow, I want to see that start to retrace back through this level. It's got to get back through 104.579 to go higher. Come on, silver. Hi, old silver. Away. We need silver. I still want, I'm just going to raise the roof if we can get silver back up there and before it comes back down here. So far, this level right here is holding. Look at that. Consequent encroachment was just hit. Tippy tappy, they're all just staying on top of it, which is what I'm happy with that. And all the time we're staying on top of this. You can waffle around in here for a while, but that premium array is candy. There's a lot of liquidity sitting up here too. I do not want to see it come back down, tap that. But there's, you know, if you look at that consolidation area, there's liquidity here and liquidity here. So if you run down and tap that low and then run higher, I'm all right with that too. I'd like to see that just stay there and start driving higher though. This seems to have run all the liquidity out here. So now you want to see it punch through. Doo, 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 doo. Same kind of principle here in some Hamilton ETF here. You have a reversal here. We have a body that opens up above it and takes out this order block, bullish order block. It comes back to the bullish order block, and you want to see it escape here and start running higher. That is above the premium level, so I wouldn't take it. I'd wait for a discount. Derek's discount would be in here somewhere. You want to get below 50% of that, which would be a return back into this consolidation. I'd like to see it somewhere in 1771. See, I'm glad I stayed out of that. Looking for this to go long. You've come all the way back into that candle's base premium. So you go down to box inside this range. There's your boxing from 1 to the bottom of the discount one inside that range. There's a small one right here. So box to box. Done. And Hadi probably is smashing them, those kind of trades. But that's box to box. Now the range is extending. So I'm looking for this to run back through that level. If we can get through that level, I'm looking for this trend line phantom to get taken out. It's got to get through that box though. Oh, that was you, said I can. Good for you. I thought it was Derek or Gary, but yeah, excellent. If you're in ICAD as well, Craig, good for you, man. Well done. Well done. Fortunate to have added more CRWD yesterday. How do you manage a stock at an all-time high? Upside targets. Do your fib projection. Take your swing, your most recent swing point or swing reversal. Pull your fib tool on it, and then extend for 2.5, and then each standard deviation after. So go for 3, then 4, and then manage your stop loss accordingly. And I've given you several different methods for doing that. Obviously, you can't use the fib tool,
you'll use reversals. Whatever time frame you're on, stay there. If you're willing to, if you're on a daily, you're going to have a huge stop loss and a lot of potential profit loss. A 1 hour, if you're on a daily chart, a 1 hour is a pretty cool place to do reversals. Like for example here, notice the difference between this reversal on the 1 hour and the daily. Daily, your reversal is here. See how you ripped all the way through it? And your stop loss would have to sit way down here. The moment you trade above it, you trade into it, you go long, you go up to premium. We're looking for this premium array up here. Order block, you hit the order block, reversed. We didn't get the premium array just yet, equal highs. And then it ripped all the way back down through your level that you entered in at. Now all of a sudden you were in profit. That's why you pay yourself at 50, 62%, blah, blah, blah. If you don't use that method, then you're coming all the way back down. Now you're under extreme sweat, pressure, and you're in a discount array in a larger range. You hit the discount array again, and now all of a sudden you get a kickback, and now you're above that level, and you're like, ooh, I'm back to in profit again, right? So you have to weather all of that. But you have to be disciplined enough to hold your stop loss on that if you want to aim for just box to box. And that ripped against you in 2 days, you'd be like, ugh, I was up thousands of dollars. Now I'm down. I'm in the hole. How do you manage your emotions at that point? It comes back up. If you're staying on that time frame, you wait for the day to close and it still closes above and you go, oh man, that big probe down, not a good sign. And it comes back down again. I'd be like, okay, I'm going to move to the sidelines on this one and wait. That's just me. I couldn't have managed that in a whole day. I can't wait that long. But you'll see that if you're a mega trader and you do 2 trades a year, when's the time you want to do that? Where do you want to make your trades? Where would you guys make your trades? You're going to do 2 trades a year. What would be the best times you'd be looking for a mega trade? Now you're looking at a daily chart, not a hourly chart. You're looking at a daily chart to make your entry. Selling into rallies between 2-year bag hold. Wow. D, would you repeat your comments on WBA, please? I'm trading that. You do 2 trades in 5 minutes. WBA Walgreens. Okay, so this is what I'm looking for in Walgreens. So you've come back up into this premium level here. So you've got the reversal. We've traded below this level, and we've traded below this level. We've traded back up inside this level, and now we're pulling away. So the fact that we've wicked through this low, I like the fact that we have a discount array down here, this whole gap, and this little imbalance right here, and we got lots of liquidity sitting down here still. So this is like cam model 1. Displacement, come back down, find support, poof, takes off. Takes out the highs, pay yourself. Now, if it comes all the way back into this level, I want to see if this holds price. So I would, if I was doing options or something, that would be a short on Walgreens right now into this area. Look for 50% or more of that range and get ready to cover your shorts. You're below 50% now, so stop loss goes to break even. Take half your trade off if you're shorting it from here. Into this range here, I'm looking for, look, 79% is right back into this gap close. Or that old high there. Gap close would be down here. So I'm still looking for this to get back down into a discount range, and I'll see how it acts inside here. Ideally, Craig, what I want to see on a daily is I want to see it dip below here, create a fair value gap, like you want to see this kind of thing, right? You want to see a run down, take out the lows, all this liquidity that's sitting down here. You want to see it run out the lows like this, create this fair value gap, trade above it, come back inside, and then start going higher. That's what I want to see right here. So I'm going to sit on this, and we're going into February now. So I like to see a number 2 low, 2, then 3, 4 into 5. I would take my, and nobody answered my question about when would you do your mega trade? May. If you're using time in a bottle, I use time in a bottle on a 1-year chart, 2-year chart, 4-year chart, and a 5-year chart. Yes, I never mentioned those before, did I? But 1 year, 2 years, 5 years. Does that help you, Craig? I'm watching it be a fair value gap and swing low like you, so I'm learning something. Finally, thanks. Atta boy. So much better when I'm not lecturing, hey? That's daily. Let's get back to the 1 hour there. Order block. Reverse. See, trade right back up into it. There's your reversal. Trade into it. Now we're already past 11 o'clock here. So there's your silver bullet. There's 11:10. You trade back into it on 11:16, 16, 17, 18. First 15 minutes of an hour. What was that I was mentioning? There's your 16, 17, 18 reversal into your turn. So as soon as you see this happening, you go, ooh, look, that's right, 11 o'clock. 10. If we can trade below that level and come back into it on a 16, 17 candle, woohoo! You're aiming for your next downside objective, which is this discount array, which hits it. So you go box to box, you're done. If you see it extend, it does. It closes, opens below. You go, good. If it trades back in there, I can get short on that. And then you take out your lows because there's nothing else below this level here. See how it trades below it and comes back, gives it another little kiss, and then continues lower and takes out the lows. You got to be able to trust this, you guys. You got to be able to see it enough to recognize that's your reversal and have the discipline of a Hadi. The Hadi and his discipline would recognize this, and he would get out there. He'd wait for that setup to occur again. He'd get short to here. He'd get out, and then he'd go, ooh, if that breaks through there on a close, I can get back in for a short continuation on the downside. And it doesn't matter that he bought and sold on the way down. That's just the way it works, man. It's quick, easy, snatch your money, move your stop loss quickly. The fail-safe is if we start to close above that, I'm wrong. So stop loss is here. The moment you close back below that level again, I would slam my stop loss. I chase my stop losses based on my fail-safe. That's how I kind of manage my bet. It's because I look at this, the fail-safes as my actual model that I'll chase it down, and if I'm wrong and it comes back against me, who cares? There's plenty of setups. They'll come. I'm watching, looking for more upside on gold, 27.70. Okay, let's get Russell a trade here. Oh, buddy. Oh, buddy. Where are we at? 27.70, you said? You're looking for this fair value gap here in this order block. Keep in mind this little fella. What's that one? We look at this. Oh yeah, we're at the bottom of the hour. There's your 30. Oh, sorry, I'm on a different chart. So yeah, look for there might be a slight reversal in here, bottom of the hour. Here's your reversal. Time in a bottle. If I could put time in a bottle, there's 29. Then 30 starts the new direction. 30, 31, 32. All the way up to what would be a logical level to see support at. Or if it breaks through that, look for a run deeper into the range. Keeping in mind these premium arrays here before reaching for those. Because this whole range here, look for 50%. So start pulling your fib tool here. So Chris, when you look at this, look at that high to low. Look for, is there a reversal in here? No, there's not a reversal. We just have a low taken. It's the bottom of the hour. It's time and price. I want to see a body get above here now. It's got to get above here and then through that inversion. So if we can get some support in this candle to push higher, and we're not hitting that button, we're just studying, man. We're just studying it. Where does it fail? Where's your fail safe, you guys? What candle is your fail safe sitting on? Give me a number. Give me a time. What time's your fail safe? You don't have a fail safe and you don't buy into that, then you won't have an answer. Stop loss obviously is sitting down here if you were trading that, which I don't see any trade in here. So anybody got a number? Dave Barry. There's my man. Dave's been with us for a long time now. Anybody going to give me that answer? No, no one, I guess. I guess I'll give you the answer. My fail safe's right here. This wick, or this candles, or doji, as it would be called in the retail market. That doji there, I want to see. I don't want to see it come back through there. I want to see this whole level here, find some support and keep pushing higher. And I'm only basing this entirely on candles, wicks, and nothing to do with inversions. So see how inversions are so much stronger than trying to rely entirely on wicks and candles. See how it hit it already? Done. Sideline. This retracement back into this breaker. All these candles here make a breaker. They take out these highs here. These candles here, a breaker that takes out that high, not quite that high. So we've retraced back into this one and this one. And now you're getting a reaction through this level, going lower. So we did not get what we wanted. This level here, you wanted to see a body get above it. It did not. It just got a wick. Even with it, no bodies above it. It just petered out and then dropped down through there. So that's why we're going lower. Find some support at this level here and keep driving through the wick. Now where are you looking? Chris, where am I looking? Where are you looking right now? Where's your stop, or where's your downside objective? Quick. Give me your downside. If you're still with Darren, I think I know what is my biggest issue. It's discipline. Can I have some suggestions on market discipline? Go to the psychology section there that I wrote in that thing. This is when you have to go back and actually read the psychology portion of our channel and reinforce that stuff. Asking for the same information over and over again. It's like disposable information. That's that point I was trying to make to you earlier. You're just disposing of the advice you were given earlier. Discipline is something that you have to hone. You have to hone it. You'll see it. Just go to the psychology section. I've explained it all in there. If you don't reread it and you don't test it, test the theory against your own thinking, you're just coming for a burger. You eat it, you poop it out, and you don't even get any nutrients from it. I don't know why I'm into eating burgers and pooping, tying that to psychology and philosophy, but whatever. If you understand its discipline, then where's the urge right now to hit the buy and sell button? And then focus on saying, I got to take my finger down or hide my mouse, take the mouse away, and acknowledge all the anxiety you keep feeling around wanting to hit the button. It's because you're chasing the dopamine hit. Your generation is so dopamine dependent, and you haven't learned to just chill and be in the moment. It's a hard, I don't envy you guys. There's not a judgment. It's just such a hard thing. You're given cell phones and freaking video games and dopamine hit constantly. Doom scrolling. Ugh. It's an insidious disease. The DSM-5 has actually put scrolling as a part of the DSM-5 now. It's actually a psychological condition. Oh, did you say burger? I want crude oil to take out 71.41. You can get timed out for that at this time of the day. Who thinks Darren should be banned for 15 minutes for mentoring burgers at a diamond stream? That's true. I'm sorry. I apologize. Retap old high. Come on down. Look at this here. See how we've traded above that level again now? You've run this low. You come back into 50% of that wick. You got to know your wicks as well. 50% of the wick ran higher, took out this high, consolidation. We have a displacement candle. Come back to that level we want to see get hit and reverse and come down. If not, if it breaks through it, it's going to use it to leverage to go higher. So there's how you see that. So if you're disciplined right now, ask yourself, Chris, were you saying, oh, I should have been short on that? And now you realize that you shouldn't have, because if you have enough discipline to sit there and wait for a different setup, you go, oh, I'm glad I didn't jump on my impulsiveness to go short on that and aim for down here, because that's the downside objective I would have been looking for. But the moment you run back through this mean threshold and then it takes out the reversal, you go, oh, I'm on the wrong side of that. We're coming back into this range. Comes back into a discount, runs above 50, 62% now. Now, if it reverses, we're back into this one here, this, and this. We've got all these different overlapping fair value gaps, inversions now, right? Look at the range you're in. Optimum trade entry reversal. Trade through this one, find support, come lower, take out the mean threshold of that candle. Then you start looking for down here again. And this becomes the next price leg. And where does it come back to? Order block. That one's pretty much the one. This one's hidden inside this one. And then that little discount array there. So you can see how if you would have taken this here and said, I'm going to go long on that, as soon as it hits 50% of that range, which was right. So as soon as that went, boop, hit 50%, you move to break even, take a portion off, pay yourself there, move to 50%, and it comes back and takes you out. So if you're on the wrong side of this trade, at least you paid yourself with the fib tool technique right at that level. And you see how you instantly, you get in and you go, I'm going long. I'm inside that. I'm at a discount portion. I better, as soon as it gets to 50, I better move to break even if it comes back and takes me out. Or at least I took off half my trade, a couple of pips, a couple of handles, hit there, take another portion off, half your trade, 40% of your trades here, 60% of your trade is off already at this point. It comes back and takes you out, and you're all in profit just in one candle. And see how now it's broken that level? Come back using this candle as support right here. Continue going lower. We're looking for this guy down here. That's how it quickly will change up on you. And that's how you can catch your trade inside the range that you're in. Quickly pay yourself. That's Hadith kind of discipline right there. If you were waiting for this to get all the way back up into here and you did not use the fib tool to pay yourself, you just got beat up. It just came back and took your stop loss out. And that's a whole new level of discipline you got to have. That's not just seeing a trade. That's being disciplined enough to say, I'm okay to take a little bit of profit. What would Freud say about your obsession with food and poop there? Yeah, something to do with my mother. They would blame my mother for that. Good one, Peter. 1022 candle. If it breaks with, it can look for reversal. I always use the swap for more confirmation. Use the swap. I always use the swap for more confirmation. He is on a roll today, so his back must be feeling better. Yeah. I took 2 pills all day yesterday, and so far I haven't hit any pills this morning. So I've got some wicked vertigo going on right now. My head's just like rolling around. Impulse means no model. 21,388 hit so accurately of the fib. Wow. The VWAP. Jeepers, VWAP. I don't use VWAP. I have no idea what the hell VWAP is. Range extension. Back up inside here. Look at this array here. Hit it all the way back up to that dude again. Now, if you work through here, welcome to lunch hour lashings. This is the lashings you shall receive during lunch hour. We have a reversal right here. And we've gone into a full wick through here. Okay, I thought it was just actually going to close above that, but we'll see where that one closed. Got 39 more minutes or seconds. This should provide support. No, still no body above it, but do we get support here and keep going higher? I'm just trying to stay. This is kind of fun because you're going to try and stay on the chart using your time in a bottle. Now stay inside price action. This is great practice. Don't touch it. Just practice this because you got the next hour and a half to 2 hours of just going sideways. So this is where you get eat up in the market. This is where you give back your money. If you're not absolutely sure and you're not disciplined enough to trade internal range liquidity inside a small little range like this, you should not even be engaging in it. Impulse means no model. That's right. Love that impulse means no model. I think that should be a trading motto. That'll be the word of the day. Is that what you said? Impulse needs no model. All means no model. There you go, Dave. There's the word of the day, the sentence, the meaning of the day. Impulse means no model. $15-minute little bull flag going on there. I love this 1 hour reversal. Came all the way back down to that 1 hour, or that little imbalance we talked about here. That little SIBI came down one more time, tapped it. Nice reaction off of that this morning. And now look at the tap, this old high, consolidation. This is the impulse leg. Wait for a return or retracement back into a level that provides some support, which is back down in here. We'll wait for a reversal on the lower time frames if you're looking for a reversal. You still got this little piece down here. It's lunch hour now, so 12 o'clock. I'd like to see 12 o'clock take out these lows here one more time. And 12 makes the low. Remember? What does time in a bottle tell us? We have two boxes up there, 1027 and 1110 in 1 minute. Which one do you consider as a box-to-box strategy? 1027? Oh, you mean like in here? 1027 and 1110. 1027. Ah, okay. So look at the range that you're in. And the higher range is this guy here, but the highest array is here. So this one here is a level. You draw it out like this. You draw it out and you see how it's been used already. And then you look at this one. You draw them all out, Hadi, and then you kind of get a feel on where they're sitting in terms of who's been hit the most, how often. So look at the overall the range that you're in right now. Okay, this one is in this larger range. We're in the premium, so you're already in the. If we take this and we go from here to here, oops, up there, come on. I want to show this to you, so I want you to see how important this one is. Get rid of that. So from this leg, this price leg here, there's 50%. If we take the quarters and we say premium, premium, discount, premium, premium, discount, discount, discount. Okay, see how we're just working this discount portion, the premium discount? Look for where you are inside that larger portion of the larger range. You're in premium discount, premium discount. See how we're just going from high to low, high to low. So you look for what levels up here support price, and what levels are in a discount portion inside the premium portion of the larger range. So that's your discount inside that range, right? So from 50 here to the high discount, and then your premium is just above here. So there's your first one, your second one, and your third one. So you see how the first one, we ran through it all the way back down to the discount, ran through it again, popped up, did not take out the high. We did not extend the range. We just literally reversed on it, came back into this guy. So now we're in a whole new range of premium and discount, still inside the overall premium portion of that huge range that you're in. You see how we're working the bottom half of it, and we're coming back up, and we're going just up above this premium level here, that we're just reaching into it now, and then we're extending lower, and we're stuck really inside here and here, inside that small range there. So you look at this premium portion also has its premium and discount range, and you see how we're stuck mostly in the discount portion of the premium. We just keep working that lower half. So these upper pieces are going to be the ones that tell me whether or not we're going to extend that range, because now that is above premium of the premium portion of the range. Remember, see how Michael does that fractally? You can take this range and you can split it into premium and discounts. And that 50% of it is sitting right on that guy there. So what one's the important one? Right there. Did I over premium, discount, premium, that one for you? So hopefully you understand that it's this I'm looking at. Then I look at how we're working in between the premium and discount portions of the premium range. And then if we're stuck inside this, like here and here, if we're working the lower half, I'm looking for little arrays inside here to here, inside that discount portion. Does that make sense? So I further split this, and I go, what's in the premium and what's in the discount? Where am I sitting above and below that portion there? And the moment I break above that, now I start getting back into this guy here and its premium and discount portions, while I'm still in the premium portion of this whole damn price leg here. Does that help? Did I make that too complicated, Adi? You got it. Okay. I figured you would. You're a smart camper. So now what I'm looking for is, now that we can start getting back into this premium portion, I'm looking for, do I find support in here now to start pushing up into this premium of the premium, right? So now this level becomes important. That is just the mean threshold. So I want to see if this guy holds price. If it bounces off the equilibrium of this chunk, then I want to see if it works above it, and then I'm going to use that for support to extend. So that's going to be my upside objective inside this box. All the time I'm finding support off that level, that equilibrium is my propulsion point to get to here. So if that comes to 50%, then I look for a retracement back into here one more time, and then eventually a push up into that premium portion there. So you can see how just what I've explained there, if you can follow along, you might have to recap, go back over and do that portion of the presentation again. But if you go back over this, you'll see how these levels become important when you look at this from an overall premium, discount, premium, discount, premium inside the premium portion of that range. So you take these boxes and they become important in terms of how you pick multiple overlapping PD arrays. And that's more advanced stuff. It's not It's not something you're going to pick up on or buy into right away. So watch, see this level right here? See if we use this now to push through here or just accelerate through it. You see how we gone from premium discount right there? We're above this. We now broke into the premium level, and we've got a mitigation block right here. This does not take out this low. We got a mitigation block. We want to bounce off at the top of that. Now we want to see if we can get above this, get back into the premium portion of this range. Well, what's sitting up there? Is there something up in this range here that tells me I can aim for it? Well, right there. Look at that. Bink, hit it right in the consequent encroachment of it. And now if we get a retracement, we're back into looking for a discount. What is back in the discount? Right here. This order block, fair value gap, anything below that 50%, old high, tap it and go higher. I want to see us get through here now and use that to go higher. So we're going to put Dave Barry's words of the day, this wisdom of the day. Does that make sense to you, Hadi? Sorry if I made that kind of confusing. Oh, he's gone. Okay, Hadi, have fun. That consolidation you described like a Mozart writing a concerto, but I just didn't like the consolidation symphony. Wore me out looking for a place to re-enter. Yeah, no. This kind of stuff, it's exciting because I just want to look for an opportunity to stay in price action. I'm not looking to trade this right now. I'm green for the day, so I do not want to give it back. So there's your, see how we literally came back to this old high, push. You want to see if we can get through here now. And then use that for support to start running these equal highs out. If it holds off here and rolls over and comes back down again, you'll see how you have to start looking at your premium and discounts again. That's how I break it up. And once you get good at it, you'll start to look at, you'll break it up visually, and you'll say, okay, what's important? What range am I in? And this is really good for helping you stay inside ranges and find out why that range, 62% optimum trade entry reversal, push higher, extend the range through here, extend that range, find support, push the range higher, reverse, come back inside that, push lower, break through your discount array right there, extend lower, you create a new low, wait for a reversal, nothing. You don't even have anything there. You look for these order blocks to get taken to the upside, come back, find support at them, run through, take out the low, does not extend the range. There's nothing in here that gives me a reversal. So you got just consolidation, and this was just a retracement back into the range from a high to low. Broke through here, took out the low. So you wait for the next reversal right here. Trades above it. You're already in the premium portion of this range, so you're looking for the mean threshold. Trades through it. Wick comes all the way up to the top. Rejection block. All the way back down into the discount. Now we've got the range extension, and we go higher. That's the symphony, my friends. Oh my goodness, that's 10 o'clock. Please explain the advanced one as well. You mentioned good stuff. Okay, JVK, I'm glad you got it, man. I don't know if I can explain that again. I'm all talked out. Green is good. I'm looking for a little more green at 21.510. What's Russell? Let's see if we can get Russell some gold action here. So if you're looking at this and you say it's a mess, it's all random. It's not random, as we've explained. It has all of its logic. sitting in there. As far as I'm concerned, it's got tons of logic in there. And you missed an opportunity to really study price action if you did not give yourself that opportunity. Like, there's so much interesting stuff going on inside here, and learning how to stay in price action. It's this kind of stuff where you're going to get better. If you look at this and go, ugh, I can't figure that out. You've got to be able to stay on the ball, on price action all the time. Otherwise, you're just going to get thrown off and get frustrated. And get a fail-safe. Like, you hear me preaching them all the time. Fail-safes are really important to have. And that's that point at which you go, it's failed for me. I'm on the wrong side of this. Let's go through these one more time, and then I'm out of here for the morning. Come back, retest, go higher. You want to see it get through this level here now to start pushing into this gap. Nice fill of that gap. I like it. And right up into that imbalance right there. Bing, hit it nicely. We've had a nice reaction out of that. So I'm really stuck between this candle's close or open now at 44,731. And that's it for the day. I don't think you're going to make any higher or lower. I think it's just going to sit inside that level there. I'd be surprised if it starts to slam higher. Yeah, I'm stuck in here right now. So I've got no, based on just this alone and no lower time frame stuff. I'm sure we could find something lower time frame, but right now you are right in the middle of the consequent encroachment. So I'm stuck. I'm stuck between literally high to low of the day. You're right in the middle. That's hitting our downside box again for natural gas. I want to see it get back down into here so I can buy some more of that. Real estate going to shit. I tell you, this one is overall. There's a nice little discount array down here. And we just come back to how close we come to just hitting it here. We're holding off, holding off. We may see one little dip down into here at $8.13. And believe me, $8.13 on a 12-cent per month dividend is like 14% or something like that return on dividends. And they pay consistently every month. Every month. Even in these shitty downtimes. They still pay consistently. It's crazy. And that's for you American people down there. That's a good dividend yield. Gold. Oh, come on, Russell. Let's go, buddy. Let's get it up there. Right there. He's looking for the 2770 level. I think you're going to get that today. It's 15-minute, 1 hour. There's a 1 hour chart. Oof, you just came back up into this one here. See this premium and discount? So there's your discount. So box to box. You're inside that box. You've fully filled it already. What you're looking for now is just this pushing through here. He's reaching for something else in here, like for this one. You want to see that if we get above that and find support at it, look for this candle's low, wick, open, mean threshold, and then run for the highs. Because after 27.787, after that, now we're looking for a run back into this breaker. So I think you're going to get your wish today there, Russell. Bitcoin is run right up into that consequent encroachment we're finally looking for. It's hit it. It's got to be consequent encroachment by now, for sure. Come on. Still not hit it? God dang. We're back into this imbalance. If that holds, we don't get any more trading below here. Get through that mean threshold. I want to see that start to work in that bottom portion of that gap here. This immediate rebalance of this BISI here. Get through the mean threshold here. Find some support above the consolidation and run higher. Look for consolidation to consolidation. Cam 1, cam model here. Small little range. You're looking for a hunt in there. Disney. No body below here yet. We still got a retracement back into here. Keep your eyes on this level here. It's got a ways to go yet before it starts to go positive for me. Right now it feels bearish. All the time we're inside this, come back and tap it and roll over. I'm bearish. I wouldn't be more bullish again until I get on top of this and then get through here. Then you can resume going higher. WBA still looking for a retracement down deeper. Reversal. Look at that. Holds right on the top. Reverses, comes back into the discount. Runs higher through the mean threshold. Tap it. Go higher. Laurentian's coming lower. I don't want to see this, Gary. You want to see it hold here and start going higher. You don't want to see it get back through that level. If we start getting back through this level right here, then I'm not happy. It's going to come lower. Well, you won't be happy. I want to see it come down lower because I want to get in down here. But anyway, we're going into February, so I'm expecting to see a measure of retracement now. Look at ICAD. Hello. Where would that have been if you would have bought into that at the beginning of the year, hey? $1.78. You're 100% return on your money already. Well, almost. Let's go. Come on, Silver. Hi, old Silver. $11 and 12 o'clock. There's 11, 12 o'clock. Literally starts to run higher. So 11 sets your low. 12 changes direction and starts marching higher. And this is your 10, 11, 12, the squabblers. Remember what we mentioned? One standard deviation above here. That would be the goal. Look at that reverse. What a beautiful little change in direction. Come back, found support at this. Look at this. Find support at that. Keep going higher. Look for one standard deviation above here now. And then hmm. 575, see if we get up there. Market maker buy model. You've been in a buy model here for since the 27th for market maker buy. I've got this reversal, support, support, support. That found support, looking for higher prices, looking for a run back into this range. 50%, you're above 50% right now. Looking for 62% at 576. Which will put you at one standard deviation at 62. Anyway. You're long on silver as well. Hi-ho. We're going to put Dave Barry up here. Dave Barry's the new carrot. The Dave Barry impulsiveness means no model. Oh my goodness. Stretch a bit. Now remember, you're still in lunch hour. And this could quite easily swing on you. So if you're in this, make sure you have your stop well managed. Mm, Any questions or anything? I think that might be it for me for the day. And I'm just going to check, see where my girl is. If she's out and about, I'll stick around for a bit. Somewhere. You're out of here, Russell? Well, if you are, I'm not out of here yet, buddy. My wife's got the cards, and when I hear the garage door open, I'll grab a mop quickly and start mopping the floor. So she comes through the door, I'll be like, "Hey, honey, just just doing some work. Finished doing some trading, so I just thought I'd do a little cleaning and stuff. She's totally on to me though. There's days where she'd be coming home from work, she'll call and say, "I'm just heading home." I'm like, "Oh no, okay, yeah, sure. I'm just doing some cleaning." She goes, "Yeah, sure you are." And I quickly run around, have a shower, get out of my pajamas at 4 o'clock in the afternoon. So she'll come home. She goes, "Why is there so much steam in the shower?" I don't know. It could be a water leak or something. It's like, yep, sure, okay. So I'm moving my stop loss to here now. I'm I'm not going to risk this coming back against me. So we're aiming for Dave Barry's impulse means no model. We're heading for the philosophy of the day. Yeah, she'd be like, "Are you still on the charts?" I'm like, "No. Why would I do that? You know me, honey. I'm disciplined. I'm in and out, man. I'm done." She's like, "Yeah, huh?" She knows. I think my back's coming to the end of my little run for the day. Look at this on the hourly though. You see this up here? So 62%, we're just hitting it now. Stop loss goes to 50%. Take a portion off at 62. I've only got one handle on, or one micro lot because it's lunch hour. So small leverage. So I'm like just following this up behind it now. If we can get to 70%, I'll move to 62. There never seems to be enough time. So often trade entry reversal. This could be the perfect place for that opportunity to happen. Let's get our Dave Barry carrot objective. Oh, it's a terrible idea. Absolutely, it's a terrible idea. Don't even think about that, Russell. Even though that's the objective. And that's an interesting thing to document. You know, oh, we think it's going to go there. I still got another. Why not take another 25 handles to get there? Why not? Well, here's a reversal. We're just coming up close to that 62% retracement level. There's a reverse. We've traded below it. So I'm out. I'm going to do a Hadi and I'm out. There's a reverse into that. So that's my, as soon as I see that set up, I'm on the wrong side of it. When I get back through it, come back, find support at it, and then finish up there. So if we trade back through it and it comes back to it one more time, technically I could get back in it, but I take that last little piece there. It's a small little run, but that's good. That's when you flinch. See where that closes. 21, 25, 27 is going to make the high. That's okay. I'm okay with that. Rejection block. It trades back through it again, up, down. So you see how it can, that shook me out. Then it traded above it, say, oh, that could be long. It comes back, found support, and then starts to go higher. So you're just kind of watching this level right now. See how you've traded below it, into it, and back through it. And now you're trading into it again, and now it looks like you're digging through it on the other side. You got one here, and you got one here, so you'd have to break through this one on the downside to keep coming lower. I took the first one, but I didn't realize that the second one's sitting right there. That could still go higher. $46, $466. Oh, down here. Yeah, we get back down in here. I do like this. If we come back and retest 429, and where would that put us? Premium discount. See how we're wicking through it, then eating through it one more time. This is where I start to go, oh, I'm happy I got out. Went through it, went through it. This is where you get this little consolidation thing happening here. Now you're through this one on a close. Look for this candle to provide some support. You want to see that stay open now. Give it a little kiss. Don't fill it. There you go. And start coming lower. Leave that little piece open. Come on down. Now you're going to be happy you didn't take it, Russell. See, that's a screen capture for you, Russell. Screen capture that and document that, saying, at this point, I felt because we had this as an upside objective, I was so convinced. Price kept moving. I was so convinced. And you only need to have, and this is what we call mental models. How many times do you need to be convinced of something is true before you actually believe in it? So are you one of those one-time things? I need to show you I can do it once, and that's good for me. Are you one of those 2 times people, 3, 4, 10? Are you one of those people that never are convinced it works? Are you one of those people that need to be shown all the time how to do it? And then you're convinced when it's happening. Like that's finding someone's meta model, right? Where you find out management. When you have people into manage, you start putting managers into positions, you find out what kind of meta model they run. If they're never happy and they never trust that you're succeeding and they feel like they have to stand over you the whole time, those are the micromanagers, right? Whereas, so my point is, if you see this happening over and over again, going higher and higher, it's proving to you it's going higher. How many times does it need to prove to you to go higher before you start going, oh, it's definitely going to hit this now? Or do you need to see, nope, now it's reversing, so I'm out. Follow your rule, discipline, and wait. You know when it trades above this level and uses it for support, then I'll go higher. Or you see a low taken, reversal, find support, break out above that one. So you've got this one and this one to provide support to go higher. Game on. So you need to screen capture that and say, why was that? I convinced that it was going to go there and one straight line, that it was never going to retrace there. Time and price, right? Is there a time where we expect a retracement? Here's your lower part of your candle, or your 12 o'clock candle. Wick, 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 wick. All the way comes up. We know 12 o'clock's a turn candle potentially. So 12 down into 1400, and then see a reversal, 1400 all the way back up for the rest of the day. 14, then 15, 16 at the end of the day. And you'll say to yourself, this is why I'm looking for these levels, that one there and that one there. So make them big and bold and beautiful. Mark them out. And that way you study them as they're happening, and you'll see the range that you're in. Then look at your fib tool. That's premium. Just above premium, that's the discount. So if we get this on a close through the mean threshold of that candle, look at that, just literally comes up, hits the mean threshold, drives all the way back down and through. So that's up close candle, this down close candle. 1, 2. That's the only 2 candles you got, and see how they're overlapping one another. When you got that tight of consolidation and you got a little fair value gap here and one here, that's the ones you can play off of. But ultimately you've got mean thresholds of the candles, from mean threshold to mean threshold. One of them has to give way. Well, if we get some leverage with this to find support off the mean threshold through the SIBI, then I'd look for lower prices. If we close literally on that, see how we've closed on the top of it here, opened on it, come down, tap the bottom one in the discount. Now you want to see this run through the mean threshold of here and then start climbing higher. So I'd like to see this go higher now, just based on that one little tiny area here. If it closes below here, you change it up. So wait for the 20 seconds to see what happens here. If it continues to go lower, I'm looking for this level here to give me some sort of support. Yeah, go for lunch, man. Don't muck around in lunch hour. But if this is the 12 o'clock high, the noon retracement, remember on my candles, my time in a bottle, 12, 9, 10, 11, 12, 12 sets of reversal. There's your 12 reversal. So this is the 12 o'clock high noon right here, 12 o'clock on the hourly basis. This is minutes. Hourly basis is the same way. And look at that. There's a 12:30, a swing high. 30.32 is right here. So I want to see that 30 hold and keep coming lower now. I'll go to, and here's an interesting thing here. So now you're thinking about the crazy Ivan moment, right? So 30.32, 36 to 38. Do we get a crazy Ivan run up here and then come lower? So the next 10 minutes is a watch that level. See how these levels are very important. See how the bodies are opening and closing on those two little levels. Tell me they're not important. Crazy, crazy important. A nice little price action study here. Now is your mind going, oh, we're going bullish now. And then it goes, oh, come back again. Just because you see a big green candle there, wait for it to see the close. You got to wait for the close. Because that, when you're seeing that go, oh, it's going higher now. If you were saying to yourself as you saw that go higher and go, oh, it's going higher now. Finally, it's taken off. Regret. Wait for it to close. Now we've closed below it. So now I'm bearish. I'm not bullish until I break this high. And no, I'm not going bullish just because it's all big green candle. I wait to see where that closes. It's only 1 minute. If it shoots up and goes all the way up to here, I don't care. It doesn't matter. It just gives you a piece of information. That's all. That can come all the way up to here. Just take out that high right there. 75% of that range. Boop, right there. That's the mean threshold of that candle. 8 seconds. 3, 2, 1. Let's go. All right. Now look. Now I'm bullish. Look for this candle, the high, and then this one here, the open. Now you want to see this extend, so you want to go higher. Crazy Ivan, right? 2 makes a low, change direction. And this is the range extension, right? Because we're just above the premium, into the premium level there. So if that retraces all the way back down to here, look for some support off that right there. Now you want to see it go higher. So just watch it. You want, yeah, tap the bottom, sure, why not? I don't want to see it come all the way back down here again. It's done its work. Get out of Dodge. We just came back into that imbalance. So this is kind of fun because now you get to say, if it's still in this consolidation, you've come up to the mean threshold. We have not traded through it with a bold body candle. We're just wicking through it. And then we're back to here. So we find support. Now you want to see this accelerate through here. You got support here. You've double tapped it again. Time to leave. If it comes back through here, again, you go back into a bearish stance. You're staying on the horse. It's spinning around and it's jumping up and down, trying to throw you off itself now, throw you off price action. Are you on the horse? Are you staying on? Where does it fail for you? That's what you got to ask yourself right now. So that's holding. You want to see this keep pushing through here now. So now you're saying to yourself, well, what if I was in this area? When would I think about trading it? You want to see a displacement above it, come back, find support at a high. or create a fair value gap, create an opening, and trade just inside it with an institutional order flow entry drill to keep going higher. So you almost have to anticipate, what do I want to see above me here? I want to see a big displacement candle. I want to see that just taking off here. So far, we're seeing support. We're getting what we wanted. I want to get a body above here and then use this candle as a propulsion to go higher. I'm going to see a body get above there. Mean threshold. Go higher. To me, it's not really a valid candle until we break the high. So it's not an active candle yet. Now we're trading. Now this is an active candle. See how we have not got a body above the mean threshold yet? And now we've come back and cleaned out all that liquidity here on a 38 candle. So come back, clean you out. Wait, see where it closes. This is the wick doing the damage. Or it's a displacement candle down and we're using this level here as support to go lower. You see, Russell, how you can get beat up in this lunch hour? Even though you're still trying to call it, see how we've stayed above that level? The wick did the damage on the 38 candle, and we're still above the premium array to go higher. It's all to do is just quickly come back into that discount array, gather up some liquidity, pair it up with the guys just above here, here, here. We're marking time during lunch hour. As Mike would say, just marking time. So algorithm's still kind of running, still kind of setting its premium discount arrays inside these small little consolidated ranges. So overall, cam model people are just watching this whole lunch hour set up for a displacement return to continuation or pop up, Judas swing into 2 o'clock, drop down, use this candle and the price leg to go lower. Like there's a whole bunch of different scenarios you can run through your head here. You got to get a close above here. Look at all this relative cheese sitting up here, relative eco highs. If you like what we've done today, hit the like button. I appreciate it. If you haven't already done so, if you're new to our channel, please feel free to subscribe. I've only got, I actually lost people while I was away. People actually canceled their subscriptions. They left. They thought I'd gone, I guess. And we've just managed to get back every, I think I'm up one person this entire month so far. This is a nice little displacement here, huh? See? Now watch where that closes. See? Big displacement candle down. I like that. Now let's return back into these old lows right here at 544. Old low. I like to see these ones get hit. Guess they're going to stay open. Retap the, I guess it would be this order block here. Now we've traded below that. Retap the close. Come lower. If we do come back into this, I'd like to see these old lows get tapped and leave that portion open. And then you're looking for this to go lower now. There's 40. They're not leaving that untouched. This is good. I'd love to see this come all the way down into a 2 o'clock retracement, like a deep 2 o'clock retracement, and then a run up for the rest of the day. I could come all the way down to 365. So there's the retracement back into the lows. If it fills it again, you see how you've got all this taken and this big fair value gap here forming. Now this candle becomes important for me. If we trade above this premium array one more time and we start eating through the mean threshold of that candle, body above here uses these levels for support to go higher. This is like the CAM model 1 to here, CAM model 2 to here, and CAM model 3 from high to low. Take 50% of that range if you came back into it to go higher. So this CAM 1, 2, and 3 models forming right now if we get above here. They were traced all the way back up into that premium array, tapped it one more time. Bodies are still respecting the low. Wicks do a bit of damage, pulling back into this range. You're up into the premium portion. Let's see it get through here on a close. Come back and use this candle for support to keep coming lower now. Down. Do you get a feel for this a little better today now, Russell? I want to see this start accelerating down here now. Come back into that candle, tap it, and come on down. Good afternoon, Chandra. Sorry I missed you earlier. Back inside here. Keep coming lower. I hope you understand where that's trying to stay on top of these things and see how they provide a level of support when they break, when you expect price to go lower. So I'm moving my stop into break even now. Takes out a low, so I got to move to stop into break even.
that's going to be it for me. So I'd like to see some sort of measure of retracement come down into a 50% of this range, maybe back to this order block here would be good. Anywhere inside there would be kind of nice to see. I'm out already. Yeah, I'd like to see something like that continue down into here. And then march higher. I'm not a big afternoon trader, so it's got to be a really good clean setup. And I'm not giving back any of the profits I've made today. So any questions before I leave? Anybody? There's only 27 of you in here. Not that I don't appreciate 27 people, because I love all of you. Thank you very much for sticking around. Upside objective is hit. Upside objective is hit. Got to get above that though. This one's driven through it. That's good. Coffee, I like that. And we're still heading for our upside objective in live cattle. That's quite a run today. And so far everything's working out hunky-dory. All those are working out nicely. Reversal. Trade back into it. Go higher. Premium array. You break through it. Use the premium array to extend the range. Reverse. Trade back into the reversal. Short into this discount array. Box to box trading. It's over and over again, man. It's on a 1 minute chart. So there's no reason. Just showing this over and over again should show you no reason to get worried about being in a trade or not. It happens all the time. You can just scroll through charts and look for your entry. Look for, nope, not in that one. Nope, not in that one. Oh, there it is. I think I'll take that. Where's the next premium array? Out. Where's my next chart? Let's go to a next chart and have a look at there. That's an hourly. The same kind of thing. Take out a low, reverse, trade back into it. Here, stop losses here. Take out a high, pay yourself inside a range. 50, 62%, 70%, blah, blah, blah. Pay yourself on the way up. Like, even if you took this on the hourly basis, like, you would have been just freaking killing this. You bought this here, anywhere inside here, 1, 2, or 3. Stop losses sitting here. Wait for it to take out the next high, which is right here. Rips through it, hits 50%. Move your stop loss from anywhere inside here to break even or in profit. Take half your trade off there. 62%. Notice it doesn't come back to 50. Then it runs to 70%. It does not come back to 62, so you're moving it to 62 now. Then it hits 75%. You move to 70 and you pay yourself here. Then all of a sudden it hits 79%. You pay yourself again, and it finally comes back and taps you out at 75. So that whole run there, you would have caught from this entry anywhere inside here at 27.40 all the way up to 27.66. 21.67. And did he get, he's just one handle shy of his 27.770. Anyway, that's using the fib tool on the hourly level. It's a beautiful thing. If you're having trouble with order blocks, breakers, all that kind of stuff, use the fib tool to manage your trade on the way up, and it will be stress-free. It'll be stress-free. It'll be like a video game, watching it come back. Oh, it didn't take me out. Woohoo! Oh, it didn't come take me out. Woohoo! Oh, it finally took me out up there. That's 70% of the range. Internal range liquidity. Move to the sidelines. Wait. Was that the only trade you're ever going to see this year? It's an hourly chart, man. Bitcoin. Same thing. Bitcoin comes back inside. Trades below. We already talked about this. Stop losses here. As soon as it breaks out that above that high, pay yourself and move your stop loss to
in profit. 75%. Pull your fib tool on that whole range. This is buffering here. You could have bought yourself in on this one. No, I guess you wouldn't have buffered that. Forget it. Let's go, Disney. Let's go. Let's go, Disney. Let's go. Come on, Craig. Let's get you up there, buddy. No break in structure yet. We have to see this close on a body for a break in structure. Otherwise, we want Craig to go to the moon with that. Come on down, sister. Come on down. All right. Thank you. You're welcome. Was your stop on that gold trade? I got stopped out at the low. Are you using the 1 hour chart? Sorry, the 1 hour chart, Russell? If you're trading on a 1 hour chart, stay on the 1 hour chart for managing it. Unless you're trying to chase it up at a premium level, then you're going to have to manage it on a 1 minute chart. But if that's your upside objective on an hourly chart, and you've got in off of, let's say, down here, where's your stop loss? Let's look at the stop loss. Let's not even worry about that low there. Let's just take you in on a trade here. Let's say this swing is taken out here at 11:30 this morning. Okay, and you look for this, and you come trade back into your reversal right here. And now you say, as soon as it breaks this high here, I want to see price close above it, come back and use this for support. See how it does? Finds its support. And then your stop loss, which is sitting here, I would move up into this candle's low. So I'd move into profits. It's stress-free right now. And now we're waiting for either you're trading on the 1 hour using that 62% pattern, or you wait for the first reversal that you find. There's the first reversal. You traded below it. Trades back into it. You're out of your trade until you see the next reversal. Here's a immediate rebalance. It comes back down into this order block. Trades back up. Immediate rebalance. It goes above the immediate rebalance. Comes back into that candle. We have that fair value gap above us that told us that we were changing directions. As soon as it closes above that, I'm going long from there. If it comes back and taps it. If it doesn't, I look for this candle for support to continue going higher. Closed above it, taps it, you go higher, and you see this reversal, and you go, oh, I'm on the wrong side of it now. It's coming lower. Inside this range, 50%. Back to that little fair value gap we're looking at there. Draw it out. It taps it again, finds support. You want to see that hold support now and continue going higher. There's an order block there as well. So you have to be able to draw these things out, Russell, and watch how they're playing out. They become very important levels for support. So you got this guy right here. And this guy right here. Draw them out every single time. Right there. I'm looking at this one here to here. You traded above it. See how you come back into it? Tap it, go long. So now your fail safe is, I don't want to see it get through here. Or as soon as I see a reversal get taken to the upside, I'm closing my trade out, and I won't get back in sync with it until the premium portion of that range extends. So if this is my short run here and I run above, I know this range here is going to extend if I can get above the premium. So it gets above the premium and taps it, and I start going higher, extends the range. And then I see there's a small little, that one's good. Then I see this little reversal here, and I go, if it trades below it, I'm going to drop down into this range. So it drops below it, comes back up inside it, taps it, and we extend the range. Then you pull your fib tool and say 50% of the range. If I'm on the wrong side of it and it trades back against me, I'm out as soon as it hits 50% of the range. So this is the Hadid type of discipline you got to have, right there. So let's say you got in here, you're in the premium, you want to sell it at a discount. As soon as it hits 50, what do? Half the trade is off. We move to break even. It hits 62%. No, it just hits this old level. You want to see provide support. For you, if you're short, you want to see it break through it. It doesn't. It hits it and then all of a sudden snaps back and takes you out. It did not take your stop yet because you're fail safe, and using the principles that I taught you on your fib tool gets you out of your trade. Half your trade is gone already, and the other half is at break even. So you got a small little portion there. You broke even. It comes back down into discount right here. Draw that little sucker out, comes back, taps it. Now you say, where's the premium array? I want to see it get through a premium array. Well, the premium array is just this mean threshold now, because this is a SIBI, not a BISI. So I want to see it get through there. It wicks through it and then drives right through, extends the range. Comes back, drops below it one more time. Uses it for support. Now I want to see this range get extended because there's nothing else down here except this little SIBI here. It drops below it right there. Takes out the range, comes back inside it right there, taps it, and runs lower. Now you look for this mean threshold. It takes out the mean threshold, creates another reversal. You trade back above it, find support anywhere from here to here. You find support, then all of a sudden it closes below it, extends the range. Comes back up. Got little imbalances here. Wait for all this to get cleared out. Use that for support. It hasn't come all the way back and tapped it yet. You got this old high. I'd like to see that just tap this one more time. You got a small little premium array inside this range here. It's got to get above that and then start pushing up above that little imbalance there. Use this candle for support and run higher. Okay, so for your gold, that's how you look for managing on a 1 minute chart and say to yourself, do I want to be in? Do I want to be out? You can still be in a trade. You just got to be disciplined enough to carry these little small ranges. And that's maybe a level of discipline you haven't got to yet, but that's okay. That's a very advanced training, very super scalper sniper series. If you're one of those hopped up on adrenaline type of people who love being in ranges, this is how Chris would trade if Chris was disciplined. He loves doing lots of trades while he has his setups, and he can trade 30, 40 times in a day to meet that need that he has. But as long as he's got the discipline to recognize trades, you could actually trade quite well inside that. But that's a level of that Chris is nowhere, not even remotely near yet, right? He's still got to get himself under control before he gets logic like that supported. So watch for that real retap of these old highs here, all the way down into this candle. I wouldn't want to see the mean threshold. I want to see that hold price. But don't forget, this one hasn't been hit, this one hasn't been hit, and this one hasn't been hit yet. So you could have quite a deep run back into here first before running higher. I hope that helps. Once again, nice PA explanation. Slowly, more things stick, but it's difficult to assimilate all at once and keep emotions in check. That's good. That's good. It's good that you recognize that. You keep working on your emotions, and I'll keep working on drilling you with this price action study. You'll get it, Russell. Give yourself time, man. Don't beat yourself up. You don't deserve that emotional beat up. Let them go. Zen, baby. Zen. There's tons of setups. Tons of setups. That's gold. Yeah. See how you're back into these levels again? Lunch hour, hey? Look at that. Now I start to give up this stuff and I look for the premium one and let that one go. And I look for a discount one down here. Oh, it's this giant one right here. So you got to get above that one and use this candle for support to go higher. Otherwise you're stuck. It has its own premium and discount inside that SIBI, inside that small range here. Like if you pull your fib tool from high to low here, here to here. See, there's your 50%. It has its own premium and discount inside of it. So you want to see it close above that, find support, use this candle for support, get above these two and use that. You could even use this candle right here. So stop would be like a couple of ticks below this level right here. And use that candle for leverage to go higher. Anyway, that's it for me. I've been in here long enough now. It's like 4 hours already. Again, hit the subscribe button if you're new. If you're liking what we're doing, hit the old like button. Hit the like button. And I will see you guys tomorrow. Have a great day. Don't stress on this stuff, man. There's plenty of setups. Plenty of setups. Calm yourself. We'll find them. We'll show you price action and stay in the charts, man. Be safe. Give yourself a break. Go for a walk. Get some Zen, man. Don't end the day panicking about charts. Go live your life. I'll see you tomorrow.